الرحيم والصلاة والسلام على أشرف خلق الله نبينا وسيدنا محمد وعلى آله وصحبه أجمعين. Our Honorable Chief Guest, His Excellency Taha Salam Al-Amri, Executive President, Central Bank of Oman, His Excellency Sheikh Salim bin Mustahil Al-Ma'shani, Your Excellencies and distinguished guests, Assalamu alaikum. We welcome you to the 2020 editions of the New Age Banking Summit, supported by Oman Banking Association and Oman Banking and Finance Awards, powered by OER. My name is Murtada Al-Lawati. I'm the AGM Head of Marketing at Al-Izz Islamic Bank, and I will be your host for today's event. Ladies and gentlemen, we're all living under very testing times, termed as the new normal. Our sincere thanks to all of you for coming today. We also thank our audience who have joined us through Zoom and businessliveme.com's YouTube channel. In the summit today, we will discuss banking and the larger financial services industry. In this highly digital and disruptive age, together we will explore trends, innovations, and tech solutions, which are bringing a new paradigm to the industry. The summit brings together the industry captains, senior technology leaders, and experts to share insights on new market developments and debate on the focus areas for Omani financial institutions. During the day, we're also going to present Oman Banking and Finance Awards powered by OER. I'd like to thank our valued partners and sponsors, Oman Banking Association, Oman Data Park, Paymate, Ubar Capital, OER, Alam al-Iqtisad wal-A'mal, businessliveme.com, Banking CIO Outlook, Times of Oman, and Al-Shabiba for their support. To begin the proceedings, we now invite Mr. Atulya Sharma, CEO of United Media Services, to deliver the opening remarks.
Thanks, Murtada, and good morning, everyone. With everybody's permission, I'm removing my mask. I think I'm maintaining enough social distance to be doing that. Foremost, a warm welcome to our chief guest for the event, His Excellency Tahir Salam Al-Amri, the Executive President of the Central Bank of Oman. Thank you, Your Excellency. We are also grateful to His Excellency Sheikh Salim bin Mustahil Al-Ma'shani for gracing today's event. Thank you, Sheikh Salim. We are honored to have amongst us the leading light of Oman's banking, insurance, and IT sectors, and we thank each one of you for being physically present here today. Last but not the least, a big thank you to all the sponsors and partners who have made today's event possible. Given COVID protocols and to ensure everyone's safety, we only have few attendees in the auditorium today, but as we speak, we have an over 200+ strong audience that is attending this session virtually on Zoom and YouTube, and the entire recording of the proceedings will be hosted on our business portal, businessliveme.com. A warm welcome to the 5th edition of the New Age Banking Summit, or NABS as we call it in short. We are indeed honored to have such an august audience offline, physically, and online present with us today. Though this is the 5th edition of NABS in Oman, otherwise this is actually the 16th edition of this pretty powerful platform that we've been able to create from 2016. We have hosted this summit not just in the other GCC markets of Dubai and Qatar, but we've also taken it to the African markets of Nigeria and South Africa and Kenya, and also Poland in Europe. So it is a powerful platform. It has a very compelling subject matter, and we are very proud to be hosting the 16th edition of this and the 5th for Oman itself. You will all agree that financial services sector in general and banking in particular are facing huge winds of change. Faced with the challenges of digitalization, what Murtada was alluding to, success for financial services today depends on how they use technology to transform their business model and to create new value, and in the bargain become indispensable partners in the ever-increasing interdependent networks and complex value structures that we see in the world today that cut across businesses and cut across geographies. To maintain a competitive advantage, banks must embrace new business models that combine agility with security, with trust at the heart of their strategies. The new business imperative is possibly to innovate, show relevance, and provide value while the foundation remains trust, as I mentioned. Let's begin by looking at some of the macro factors that are impacting the banking landscape and also possibly hastening the transition towards a more customer-facing ecosystem. So the first such trend, mega trend as I call it, is about not just millennials, but people across all age groups wanting to be in control of their own finances. They are very much willing to embrace a self-service model. It's no longer that they want to conform with conventional wisdom or conform with the one-size-fits-all mentality. They instead are going ahead and creating their own portfolios using diverse service providers and diverse financial services companies. The second mega trend is around technology. In our mobile-driven and app-driven world of today, customers are used to simplicity and are very impatient when it comes to structural inefficiencies in any service or system. They want their services to be on demand, integrated, and friction-free. And they want their experiences to be consistent, intuitive, and meaningful. In that regard, I must say that banks sometimes, which are saddled with legacy systems, they possibly find it a little difficult to transition towards a more innovative and possibly a more digitally transformed sort of a business model. The third piece, the third macro factor, as I would call it, is competition itself. Competitors for banks today are not the other banks alone, but today we have companies like Facebook, Apple, Amazon, PayPal, Ant, which is Alibaba, so many of them, and a lot of other fintechs. They are all disrupting the banking ecosystem, and services which used to be the domain of the core banking players are now also being accessed and being offered by these players. So that's a big change that is happening on the competitive front as far as banking and financial services are concerned. The last but not the least is regulations. These fintechs and the startups, they are not so constrained by the regulatory environment because they are born in the cloud, and to that extent, they get away with a lot of the regulations that the big banks definitely have to sort of embrace and conform with. Let's also remember that these fintechs do not have to spend so much on legacy systems, the core banking systems that the big banks have to sort of invest in. So they choose to go for the more profitable parts of the business, of course, offering better customer experience. So that is the competition that is emerging for banking today. It's already started happening in Oman, as is happening very rapidly in the rest of the world. So you would all agree that, more than me, you all know that banks are the backbone of Oman's economy, and they have a huge fiduciary responsibility, which they have been performing very well thus far. But faced with the COVID pandemic and the recession that we are going through, which has been forced by this pandemic, I think banks have a pivotal role to play in reviving the economy. I think the Omani banking mindset needs a slight mindset shift, and like the fintechs, Omani banks have to map their course for new products, services, and customer journeys, which possibly would offer better customer experiences and better user journeys for their key players. core elements in the banking system that need to be addressed, and these are terms that we keep hearing. One, of course, is data. I think mastering data and leveraging breakthroughs in technology is absolutely key for any bank or any financial services company. Technologies like cloud platforms, enhanced analytical capabilities, and augmented intelligence can help create levels of customer engagement and operational efficiency never seen before. So this can be done by using intelligent market tools that convert data into actionable insights, which can then be translated into personalized commercial promotions in a lively manner, delivered through the most appropriate channel for each individual customer. So the customization can happen to that extent. And the second one, which again is something that we keep hearing about, is agility. Customers today are looking for intuitive experiences. They want partners who not only understand their needs, but they want partners who can anticipate when their assistance will be required and come equal to the task every time. So I think creating an ecosystem of trusted platforms through agility will be a very, very important component for the banks. So to conclude, let me say that data, trust, and relationships are the key components of a bank's competitive advantage. And I think everybody in the room will agree that the Omani banking ecosystem is very much up for this challenge and will definitely make it happen. During the day, our esteemed speakers will delve deeper into banking and larger financial services ecosystem that is changing faster than the speed of thought, as I just mentioned. Hope you will find these discussions immersive, informative, and productive. Thanks again to all of you, the attendees. And I must congratulate and thank my entire team at UMS, all my colleagues at UMS, who really have made this event possible against all odds. This includes our events team, UMS Events, our editorial team of OER and Alam al-Iqtisad, our design team, which has helped create all the marketing collaterals for this event, and last but not the least, our digital team, which has managed all the social media handles for this event and would also be posting it live on businesslive.me.com, as I mentioned. Thank you so much. I hope you have an enjoyable session and you find it informative and useful. Thank you.
Thank you, Atiliya, for that insightful welcome speech. See how things have changed? I have to wait for people to clean the mic before I get back on now. We'll now invite our chief guest, His Excellency Taher Salam Al-Amri, on stage to deliver the keynote address. تفضل سعادتك.
بسم الله الرحمن الرحيم. معالي الشيخ سالم بن سهيل المعشني الموقر، الأخوة الكرام، رؤساء التنفيذيين البنوك والمؤسسات المالية وغير المالية، الحضور الكريم، السلام عليكم ورحمة الله وبركاته. أولاً اسمحوا لي أبدأ بأن أتمنى كل السلامة والصحة والعافية للجميع، ونسأل الله سبحانه وتعالى أن يبعد عنا هذا الأذى في أقرب وقت ممكن بإذن الله تعالى. السلام عليكم ورحمة الله وبركاته. First of all, it gives me immense pleasure to be here among you all this morning to deliver the keynote address at this 5th New Age Banking Summit 2020. And at the outset, I would like to congratulate UMS and the organizers for arranging this summit during these challenging times. And I am confident that the deliberations at this summit would greatly benefit all stakeholders. My speech or address will try and capture the things that we thought you might be interested in hearing, and what we think is going to be shaping up our responsibilities and our sort of strategies going forward. I'm sure you'd all agree that the architecture of our present-day economy, which we proudly call modern, has been built on the numerous pillars of breathtaking inventions of wonderful and innovative minds. These inventions have so much integrated into our lives that we have taken them for granted, to the extent that we do not recognize them until we miss them. Tim Harford, the English economist and Financial Times columnist, in his book, 50 Things That Made the Modern Economy, lists out two things that are of interest to our banking fraternity. One is the bank, and the other is fintech of innovation, M-Pesa. Interestingly, the latter tries to challenge and disrupt the former. As you would have known, a remarkable aspect of M-Pesa's success story is that it was originally an experiment for facilitating repayments by microfinance borrowers. Ultimately, the users were adapting it for a variety of uses, such as sending remittances home, making payments, and storing it for value overnight. As they say, the rest is history. Among the many reasons for its success, the regulatory facilitation was of paramount importance. Recognizing the significance of technological relevance and its necessity in the arena of banking, the Central Bank of Oman has been playing a proactive, catalytic role in creating and providing an enabling environment to facilitate the growth of fintech in the Sultanate. We are extremely fortunate to have a young, tech-savvy population. With a mobile penetration ratio of 131%, mobile broadband access of 104% per inhabitant, and a fixed broadband access of 75% per household, the Sultanate is well positioned to reap rich digital dividends. Let me now take you through the journey traversed thus far by the Central Bank of Oman and share some of the highlights of what we have planned to unfold. The fintech strategy of the Central Bank of Oman is aimed at establishing a comprehensive fintech ecosystem in Oman to foster and nurture the fintech startups, the SMEs, and the technology firms, besides facilitating the existing players to innovate, develop, and offer digital solutions. Thus, apart from being in the league with the current times, our strategy would also serve as an impetus to our country's economic growth, open new job opportunities, and hopefully attract venture capitalists. We have constituted an in-house fintech committee comprising of young and energetic minds to drive our fintech strategy and promote the establishment and development of a robust fintech sector in Oman within the mandate of CBO. As a move forward, CBO has in Q2 of 2020 in place a fintech regulatory sandbox framework, which will enable applicants, both from the licensed and non-licensed institutions, to test their proposed fintech solutions live under CBO's oversight. I am happy to share that the official rollout will come shortly, which will pave the way for entities to participate and test their products in the sandbox. Further, the regulatory departments and the fintech committee are in the process of finalizing the draft cloud computing guidelines, which will shortly go through a round of consultations with all stakeholders. I am sure that this, once finalized, will provide the framework for availing cloud services by licensed institutions and foster the growth of local cloud providers. It is interesting to note that 60% of the fintech forays is related to payment products. Hence, let me now dwell on the payment system architecture in the Sultanate. The payment system, which is the digital backbone of the financial system, is robust in the Sultanate and has many firsts to its credit in the region. In order to provide a firm legal footing to the payment system, the National Payment System Law, which NPSL, was issued under the Royal Decree number 8 of 2018, followed by the issue of its secondary regulations in the early part of 2019. It paves the way for licensing new types of non-banking entities, the payment service providers, which are primarily startups or innovators. The NPSL has enabled us to issue the first payment service provider license in the second quarter of 2020. I am glad to share that this has kindled interest in several startups who are seeking PSP license, which are under our consideration right now. However, even before the enactment of the NPSL, we had launched the Mobile Payment Clearing and Switching System, or the MPCSS, in July of 2017 to facilitate mobile payments. It is a truly interoperable and unified switching and clearing platform for person-to-person and person-to-business mobile payments via mobile numbers. It was upgraded in 2019 to process QR code-based and merchant payments. This will facilitate instant person-to-person payments up to 500 Omani riyals across all participating banks. We are trying to make this channel an alternate and affordable channel when compared to, for example, card payments. I would like to add that we are also upgrading the existing payment infrastructure to increase the scale and efficiencies. The wholesale payment system, namely the real-time gross settlement system, or RTGS, is in the advanced stage of upgrade and will be up 24 hours, 7 days a week by the first half of 2021, inshallah. This will make Oman, I understand, the first country in the Arab Gulf region to operate the RTGS system 24/7. It will help businesses to make high-value payments around the clock. This would greatly help the payment system participants manage their funds efficiently. CBO is also in the process of integrating it with the GCC RTGS and exploring the prospects of integrating it as well with the Arab Regional Payment System, or ARPS Buna, which would make regional payments much more affordable. Further, recognizing the government sector alone drives around 55% of electronic payments in the Sultanate, we are working with the government entities to improve efficiencies of their payments and effectively enable them to manage payment-related risks. I'm sure many of you would have seen the press release a few days back that all government agencies will navigate from manual processing to e-processing of salaries from the 1st of January 2021. Facilitated by CBO and supported strongly by the Ministry of Finance and the banking sector, this will be a seamless process which will avoid errors and other risks in the process. We are also in discussion with the Ministry of Commerce and Industry and Investment Promotion to encourage e-payments by all private sector companies and business entities. Another interesting offering to be rolled out by the Central Bank of Oman will be the direct debit and mandate management. This will facilitate automatic recurring payments that customers wish to make by pre-authorizing the amount of debit, either fixed or variable, at regular intervals for a predefined period. This will also simplify the process of collection of payment for corporates and companies, providing ample scope for development of further innovative products. Some of the other payment-related initiatives in the coming years are the study on the formation of the National Payment Company, which we are contemplating for operating the retail payments, the launch of IBAN account numbers, and an awareness and marketing drive for payment system services. The positive outcomes of CBO's initiatives are reflected in the exponential growth in the mobile payments, the huge surge in point-of-sale and e-commerce transactions, and a fall in the share of ATM transactions in e-payments from 58% in 2017 to 27% in 2020. I am also very pleased to share as to how the increasing adoption of technology is also enabling achievement of other objectives of the government and the central bank, such as financial inclusion. An integral part of financial inclusion, as you are all aware, is to provide timely access to affordable credit, which is challenging for small businesses and SMEs. The establishment of our National Data Bank Center, Mala'a, the National Credit Registry, in December of 2019, will empower access to credit, financial inclusion, and SME development, inshallah. Mala'a will be operating with world-class technology, scalable data modeling engines, and credit bureau platforms. It will initially provide credit risk scores for consumers and corporates. Going forward, Mala'a will be expanding its scope to provide other services such as mobile lending platforms, instant decisioning modules, data analysis, and other fintech innovations. I am also happy to announce that Mala'a will be going live, inshallah, on the 18th of November 2020. Another area of our focus is to facilitate digital onboarding of customers. Having already enabled non-face-to-face onboarding by application of simplified KYC procedures for offering mobile wallets and prepaid cards, we are in the process of extending the simplified KYC framework to micro businesses. This will be a further big step in the direction of financial inclusion. In the present challenging times of social distancing, technology has played a vital role in ensuring seamless and uninterrupted financial transactions, which is so critical for the smooth functioning of the economy. We in the central bank have effectively leveraged the technological infrastructure and the tools at our disposal to provide the much-needed relief to the affected sectors of the economy and ensured no disruption to the efficient functioning of the financial system. Amongst others, we had either waived or reduced the charges for digital transactions, doubled the limit for contactless and mobile payments, permitted temporarily the usage of expired debit or credit cards, and allowed digital onboarding of customers for opening savings bank accounts. I must thank, to be honest, the banks and the financial sector for really embracing this and supporting it. We are pleased to note that the existing players in Oman are swift in adopting new modes of service delivery and technologies, and their technology spend is quite considerable. The challenge, however, for them is to have the right change management strategy. As regards the new entrants, apart from the right business strategies, there should be appropriate risk management, controls and customer protection mechanisms in line with the regulatory expectations. While the existing players are aware of the foregoing, the innovators need to be cognizant of them. Both the existing and new players have to be conscious of the important takeaway of the M-Pesa, which is any innovation should have at its heart customer-centric strategies supplemented with a sustainable business model. I am happy to note that the summit has delegates from financial services and other related diverse fields. The coverage in the summit is comprehensive, including a peek into new technologies and methodologies, understanding customers' expectations, and sharing of experiences. I take this opportunity to congratulate the prize winners of Oman Banking and Finance Awards waiting to be honored during the summit. In conclusion, I would like to state that the primary objective of the government and the Central Bank of Oman is providing the enabling environment to facilitate the existing players, the startups, and all the stakeholders to reap the rich benefits of greater technological usage and innovations. I thank the organizers again for inviting me to deliver this address and wish the summit all the success. Assalamu alaikum wa rahmatullahi wa barakatuh.
Thank you, Your Excellency, for this insightful speech. I'd now want to invite on stage Mr. Ali Hassan Musa, CEO of Oman Banks Association, to address the audience. Please help me in welcoming him to the stage.
Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning, Your Excellencies, ladies and gentlemen. It is an honor to be here today, this morning, with you, and thank you for the organizers. This morning, I'd like to take you through a few topics related to new age banking and to see what's happening around the world with some case studies. This is a quote from Bill Gates 23 years ago, that we need banking services, but we don't need banks. I'm afraid Bill Gates was wrong. Today, we still have banks. Tomorrow, we will continue to have banks. Banks have the trust of the people. They will continue, but they will evolve in terms of delivery. So today, I would like to take you through a few issues, a few topics, to look at fintech disruption, bank strategies, the changing landscape. I'd like to spend a few minutes, if I may, on Generation Z, who will change the way banks deliver their services, P2P lending, regulations, open banking, new banks and disruption, and how legacy banks have changed or on the journey of changing from being disrupted to being disruptor. And also something really important, that is purpose-driven banking and gearing up for the next generation. So let us remind ourselves, what are the disruptive technologies? What is fintech using today to disrupt banking landscape? They are using the following technologies, or they will use some of them, not all of them currently, but hybrid technology. They are also using instant payments, open banking application protocol interfaces, APIs, blockchain, robotic process automation, artificial intelligence, machine learning, prospective security. This is something different. This is not your usual cybersecurity. This is something to do with cyber forensics, something to do with machine learning to minimize the incidents that will happen at your bank. Augmented reality, big data, and quantum computing, which is not there today, but it will happen tomorrow. So these are the disruptive technologies that fintech is using. Now, how are banks around the world strategizing in general terms with fintech? They have the following strategies. Buy a fintech company, partner with fintechs, invest in fintech, transform to become a fintech, serve fintechs. Many banks, including in Oman, are doing a number of things, a combination of those strategies. One thing banks cannot do, la fi Oman wala elsewhere in the world, is to ignore fintech. So if you're doing that, or you wait to see, you may need to strategize otherwise. This is the changing landscape that's happening today. All what you see is very recent as last year, 2 years back. You have Facebook Libra project, which was stopped, by the way, by US Congress because they are scared of Facebook. So the Libra project was stopped by US Congress, but it will start again. Libra project is Facebook's cryptocurrency. You have Facebook Pay, Google checking accounts through international banks, which I will show you, I will display to you some of the case studies. Apple Card, Uber, from taxi to a financial services. There are thousands of Uber drivers around the world. Last year, Uber has started financial services. Their first customers are Uber drivers and Uber customers. Amazon is lending year after year, $1 billion US dollar. This is 3 years running, $1 billion every year. Impact of COVID-19 around the world, and this is a reflection of what's happening also in Oman. So you can see that in UK, the adult population, 12% of the adult population in the UK, in the last few months, this year, have actually downloaded for the first time their banking app because they were used to going to the bank branch. The same in Oman. MasterCard have reported around the world 40% jump in tap and go, contactless payments. Ireland, a small country in the world, but this is a reflection. Their cash withdrawal over the counter or ATMs have gone 50% less. This is the story, not in Ireland, across the world, including in Oman. In Latin America, 13 million people over the last few months, this year, have transacted e-commerce around the world. I'd like to spend the next 2 slides on Generation Z, because this will change the way you deliver banking to your new customer base. I am old enough to be Generation X. After me, there is Generation Y and Millennials. Generation Z is actually people born between 1995 and 2015. So they're between 5 to 25 years of age, yeah? And they will change the way you deliver banking. Why I say this? Their needs are very similar to all of us, to the entire population. Their needs is safe banking. But the way you would deliver the safe banking is on their terms, because their behavior is different. They constitute around 23 to 25% of the world population. In Oman, that percentage is even higher. Their behavior is completely different, yeah? They are hyper-connected, short attention of span. They live literally with their smartphones. They do not use their smartphones, they live with them. They are glued to social media with high video content. If you want to reach them, you reach them through those channels, not through text, not through SMS. They are connected across the world. Something happens, a policeman shoots someone somewhere in US or anywhere else, they have an opinion here in Oman. They are connected. They are politically aware. Every time, I have 3 Generation Z daughters, okay? Every time I tell them something that happens in the world, they already know about it. And they probably would have seen it, because everything that happens, it's live video streaming. So nothing I tell them, whatever happened in terms of news, it's new to them. They already know about it. They are socially united. They tweet and post their views. They are not afraid. And that happens, I've seen this even on Twitter in Oman. There are government agencies, government bodies who post social or through the social media channels, post anything that happens, and you can see the responses. They're very critical from Generation Z if they don't like it, or very supportive if they like it. They are on Snapchat, Instagram, TikTok, YouTube, Netflix, and other channels that will come. They have little interest outside their smartphones. There's good news to banks and bad news. The good news is their first account is with you because it's influenced by their parents. So my daughter's first account is with the bank that I have an account with. That's the same across the world. The bad news is that they do not have any brand loyalty, unlike their parents. I have brand loyalty. I've banked with the same bank for the last 25 years. They can change. They are focused on savings, but they need help in finance. Why am I profiling Generation Z? Because this is what artificial intelligence, this is what data analytics tools will do for you in terms of profiling your bank customers. Generation Z is happy to change from a bank to a fintech. They have no issues. They embrace alternate methods. If there is P2P lending, and I'll talk about that, they'll do it. They are not interested in credit cards. This doesn't go with only my daughters, it goes with my coworkers, my colleagues. They have just graduated from Generation Z. Okay, they're 26-year-olds. They do not have credit cards. Banks offer them credit cards, they decline. They are not interested to know about your products and your offerings. They are interested about their lifestyle. So you have to change to work with their lifestyle. And will deal with socially and environmentally responsible financial institutions. And I will show you a case study on this as well. You can only reach them, as I mentioned, through social media. You can help them manage their finances. You can help them save for long term, like education, or even for short term, going on a holiday next year or purchasing a game from city center. They earn money. One of my daughters actually earns money from social media channel. You can help them. And I will show you also a case study of a financial institution who not only helps them, they make them earn money through their social media. So you have to connect to their lifestyles and emotions, and they're not very difficult people. They're young kids, they're young adults, so even loyalty program to Costa Coffee or Starbucks will go a long way. They don't need big prizes. Gamification for them is really big. They're big on gamification. So let's talk a little about peer-to-peer lending. Peer-to-peer lending is part of, it's a type of crowdfunding. So crowdfunding has equity funding, has donation funding, has different models. One of them is lending. And the global, and this is on the internet, so the global number that is estimated by 2027 is $500 billion. So it's big. And there are so many platforms across the world, but the big guys are always there. Google Pay, Samsung Pay, Apple Pay, WeChat, they all have platforms for P2P lending across the world. Today, if I want money, I can do it through Google Pay if I want to. Yeah? Opportunities for banks to collaborate. Whenever there is money transaction, there has to be an account. So banks, this is where the trust comes, because trust is associated with banks. Banks can become the escrow account trustees for any P2P lending. They can earn their fees from fee income by doing this, managing a P2P lending rather than interest income. So there are opportunities. It's not direct competition. It's a different business model. Banks can even create their own platforms. So let's look at some of the examples, and these are only few, about regulation relating to peer-to-peer. Malaysia is fairly advanced. In 2015, they issued their first regulatory framework for P2P lending, and then revised it in 2016. In India, Reserve Bank of India, the Central Bank of India, 2018, last year, they have come up with revised regulatory framework specifying how much you can lend P2P, so there are limits, restrictions, etc., to minimize the exposure and any fraud prospects within P2P lending. In UK, last year again, the Financial Conduct Authority have issued the regulatory framework. In Saudi Arabia, it's a very interesting model. They have two regulators for crowdfunding. And it makes sense. The Capital Market Authority is the regulatory framework for crowdfunding in terms of equity. So if you want to invite investors by crowdfunding platforms, it is regulated by the Capital Markets Authority. If it's lending, one-to-one lending, it is regulated by the Saudi Arabian Monetary Authority. And actually on their website, they have a list of platforms that are authorized to do P2P lending. So, and it is work in progress. So SAMA is going to issue more regulations in the coming few months or a year relating to P2P funding. So this is big. This is something that has competition with banks, but it's a different type of business, and banks can actually play a part in this model. Open banking, and this is historically, when as a concept, is direct competition with a bank because it dilutes banks' brand equity. However, banks can actually have an opportunity to work using open banking platforms, creating their own open banking philosophy. And the leader in the world, in my view, is BBVA, the Spanish bank, Banco Bilbao Vizcaya Argentina, I think that's how it's pronounced. It's an international, multinational bank, Spanish-based, and their motto is actually building your own bank. So they are actually becoming an invisible bank by allowing their customers to create a platform where they can integrate multi-financial services under their brands, but the engine is actually the BBVA. That's a completely different strategy than creating your own brand equity and keep investing in that brand equity. So the bank is actually growing, but becoming a little less invisible. This is a completely paradigm shift. And this is where the world, I think, is going to head. So they have comprehensive, well-designed, scalable suite of APIs available to customers. They actually provide you with a sandbox, whether you're a retail customer, SME, or a corporate. They provide you with a test lab. Sandbox is a test lab. Last month only, in August or in September, I think it was in August, BBVA US collaborates with Google Pay to offer digital banking accounts. So Google Pay will have digital banking accounts in the US powered by BBVA. I'd like to take you through a few case studies, 4 case studies. This slide shows 2 case studies. One is Starling Bank, which is a small niche business in the UK. And one is a mass market, Nubank. It's in South America. They're digital banks. They're not very new. They're a few years old, but their model is sustainable. Starling Bank, sorry. Starling Bank was started, was founded by a lady called Anne Boden. She's Welsh, in 2014. It is niche. You hardly hear about this name. It doesn't have a brand equity. It provides APA. It is niche in SMEs, actually, in the UK. It helps customers to build their own platform at their own site using the bank account of Starling Bank, as well as any other financial services that company uses under one system. So they don't have to actually switch between different systems. It has something else. Its customers have the ability to post their views online and rate the bank on their website. They're not afraid. And that's why they've been voted 3 years in a row by the reputable British Banks Awards as the best bank in the UK. And you hardly hear this name because they're an invisible bank. They have embraced open banking. Another model, a different model, completely different, digital bank, mass market, founded by a lady again, okay? Her name is Christina, in 2013. It has only 2,000 employees, serving more than 20 million customers, from Brazil all the way to Mexico. In 7 years, they have acquired more than 20 million customers. Which bank can do this? This year, January in 2020, they have actually acquired a big engineering software company, software engineering company that's specialist in agile technologies. So these are two different case studies, but shows you what digital banking can do. Different models, both successful, small niche, and mass market. But the next step is this. Kakao Bank. Kakao Bank in South Korea. Again, started a few years back, 2016. 240,000 customers in 4 days. 10 million customers in 2 years. Hardly has a brand. It has different characters, different colors. You can see the MasterCard branded colors there. 40% of its bank staff are actually IT. But different IT skills than the one we know today. And that's not where it stops. This is the next step. Kakao Bank is part of a group, and they work very closely together. Why is it so successful? Because Kakao Bank is a sister company or affiliate company of KakaoTalk. KakaoTalk is the biggest and the top messenger service, social media channel in South Korea. So all the youngsters and the millennials and Generation X use this messenger service, which is associated with a bank. So you can see the lines between social media, between the bank, is very blurred because these support each other. And it doesn't stop there. They have launched their own fintech. So if you go to a Starbucks in South Korea, in Seoul, you pay through Kakao Pay. It's their fintech arm. And then doesn't stop there. The list goes on. Kakao Friends, these are businesses. You have Kakao Games, gamification. You have Kakao TV now, which is actually challenging Netflix in South Korea. And the list goes on. They have multiple businesses, but with the same brand. So this bank actually have touched the lifestyle of people. And that's the future. It's not only segmentation, profile, behavior of your customer, but their lifestyle. The next case is a new kid on the block. This is completely different. This is very new. It's Zelf. It's not a bank. It's not an app. So the previous case studies were apps. This is not an app. It works with messenger services. It doesn't have its own messenger service. It works with Twitter, it works with Facebook, it works with Instagram messenger services, it works with Viber and all the other messenger services. This company currently provides financial services mainly to youngsters, to Generation Z, and the services currently available, because it's very new, are only person-to-person payments and withdrawals. Withdrawals are, they'll have to issue you a card and send you a card. Withdrawals, you have to go through a KYC process. Their KYC process currently is only approved by, in France and Spain. So payments around the world, anybody can go and create an account in Zelf, but withdrawals only in France and Spain today. But this is going to change because they're very new. They're not even a Spanish or a French company. They're actually based in Latvia. So this is a new breed. We haven't seen this before. This is not an app. This is not a digital bank. This is social media banking. The funny thing about it is that if my daughter refers me to Zelf and says, Baba, send me money through Zelf, I create an account, she gets €5 immediately. If I tell my wife, can you create a Zelf account because my daughter told me, I earn 5, but my daughter earns €1 because she's a friend of a friend. So currently, and this is very new as I mentioned, they have around 350,000 teenagers, and they're making money, and the numbers are growing. Next year, let's see what Zelf will provide. I'm sure they will provide all sorts of banking services like anyone else. But this is a new breed, new disruptor. So this is not all bad news for legacy banks, because you have to change your mind. And I'll show you which banks have decided to become a disruptor rather than being a disrupted. JP Morgan CEO 5 years ago was quoted by saying, they will not eat my lunch, they being fintech. So JP Morgan last year has invested $11.4 billion in technology. The year before, they have invested $10 billion. The year before, they have invested $9 billion. So 3 years in a row, it's $30 billion. 2017, 18, and 19. $30 billion. And this investment is not in their core banking system. It's in the landscape. It's in the ecosystem. It's in fintech. They have their own fintech camp. They have invested with so many startups. They're on a mission to become a disruptor rather than disrupted by fintech. So you have to invest money, and that's what the big guys are doing. JP Morgan is 220 years old bank. Bank of America, $10 billion they have invested last year in fintech. And in technology, sorry, not in fintech, including fintech. Wells Fargo, 168-year-old bank. These are legacy banks, invested $9 billion only last year. But to invest, you need to have your own talent, and the talent now has to change in banks. Because, like I mentioned, some of the case studies, 40% of their bank staff are IT, but they're not your usual IT now. You have to have artificial intelligence specialists. You have to have people that can teach machines, algorithm mechanics, behavior analysts, because when you do segmentation, like Generation Z, you need someone to analyze their behavior. It's not going to be about your product and offerings. It has to be about customer behavior. You have to have designers, process engineers, universal advisors, partnership enablers, partnership with fintech and others. This is something really important. It goes above and beyond your CSR. Generation Z would want to work with responsible and socially conscious institutions. Financial inclusion, as His Excellency mentioned, is high on the agenda of everyone in terms of accessibility. Alhamdulillah, in Oman, accessibility is high, whether in physical branches or through mobile penetration. But we need to do more in terms of awareness and fairness. Financial wellness equals mental wellness. This is really important. Wells Fargo has invested in artificial intelligence, the 168-year-old bank, where its customers, if they subscribe to the service, can actually get alerts if they are overspending. They can get alerts that you have to pay the following bills this month. These bills are not your credit card. These are third party. These are your utility bills, because it analyzes your behavior and your spending. So you need to actually help your customers in terms of financial wellness, because that leads to their mental wellness. Financial education for children is really important. My BNK is actually a charitable organization in the UK. It works with schools and also with financial institutions. It is supported by banks, even the big banks. It is based in the UK. Even JP Morgan is one of the funders, the City of London. And all they do is educate children throughout their schooling in terms of financial education. That's all they do. So banks need to create this or partner with institutions such as this, especially in Oman. Now, this is interesting. Ant Financial, Alipay, Alibaba, have an app, a game called Ant Forest. It is played by 500 million users, and the game is a green game. If you take your car to work, you get 0 points. If you take a bus, you get some points. If you ride a bicycle, you get many points. And for these points, you actually get leaves, and the leaves create a tree. Once you, as a player, create or make a tree, Alipay, or Ant Financials, will actually plant a physical tree on your behalf. And they have planted 100 million trees in China. This is gamification for a good purpose, for a green purpose. If Ant Financials can do this, Alipay can do this, why can't banks do it? So we have to gear up for an accelerated change, because what's coming is fast forward. What you have today on the slide is not sci-fi, it is what you need to do today. All these technologies are available today. All this is happening today by someone or another. You need to have open banking. Less visible, that's fine, but you're there. You still earn money, you still help the economy. Banking has to be around your mobile, your smartphone. You have to have instant P2P payments. His Excellency mentioned the infrastructure that we have today for P2P payments. You have to have cashless, multi-currency exchange, behavior-based, personalized offers, super e-wallets across borders. Alipay is doing this. They are actually collaborating with the payment systems in India, in Finland. So they have super e-wallets, not bounded by geography. You have chatbots and intelligent assistants. You have predictive recommendations for your customers, and most importantly, you have blockchain contracts. In my last slide, I'd like to thank the organizers, the Central Bank of Oman, for always supporting the banking sector, for being the forefront of banking innovation in Oman, for supporting the banking sector and the economy during these difficult times. The Central Bank of Oman, under His Excellency's leadership, has actually come up with a number of stimulus packages and measures to assist banks to help the economy, to help customers, individual customers, corporates, small or big. So thank you, Your Excellency. Thank you to Central Bank of Oman. We'd like to thank all the bank employees who have been working throughout this pandemic, non-stop, and at the branch as well as at their offices and from home. We'd like to thank the security services of Oman, the Royal Oman Police and the armed forces for helping us through this difficult time. Last but not least, the health workers, the doctors, the nurses. So thank you all.
Thank you, Mr. Ali, for the enlightening presentation. It's time for the panel discussion. The topic for the discussion is the age of collaboration to drive innovation and transformation. Our distinguished panel, comprising of well-known industry leaders from the banking, investment, and insurance, as well as the fintech sectors, will debate on the changing dynamics of the financial services sector and the need for collaboration to develop an ecosystem of partnership between all relevant stakeholders to mitigate the challenges and work in unison to meet the goals of Vision 2040. We first invite on stage Mr. Khalid Al-Qaid, CEO of Bank Nizwa. He has steered Bank Nizwa to a new era, positioning Bank Nizwa as a strong, innovative, and relationship-oriented Sharia-compliant financial institution. A financial industry veteran with over 27 years under his belt, he's associated with Bank Nizwa since its inception. Prior to joining the bank, Al-Qaid held various posts in a host of well-respected financial institutions, including Deputy Chief Executive Officer and Chief Financial Officer at Jordan Dubai Islamic Bank, and Chief Financial Officer at Standard Chartered Bank Jordan. His expertise ranged from banking management, financial control, accounts, risk management, and asset liability, among other fields. Please help me in welcoming Khalid to the stage. We next invite on stage Mr. Sanjay Quatra, Group President, Regional Business and Chief Operating Officer of Oman Vest Group. He has over 20 years of solid experience in providing financial strategic growth and operating leadership. He's well connected globally and possesses deep sector knowledge of banking, leasing, and insurance with a focus on Oman. Earlier, he was a partner in EY MENA and has led EY's assurance practice in Qatar and Oman. He has extensive experience in matters relating to IPOs, mergers and acquisitions, restructuring, divestments, PPP, corporate governance, performance improvement, valuation, to name just a few. He has served as an advisor to several regulatory committees in Oman. Please help me in welcoming Sanjay to the stage. Our next panelist is Engineer Maqbool Wahibi, CEO of Oman Data Park, the first managed and cloud service provider in Oman. Serving around 600 corporates ranging from large to mid-size and small companies, he's part of the executive, management, and founding team member to establish ODP and has been instrumental in developing solutions tailored to address the banks, financial institutions, oil and gas sector, healthcare, government, education, and professional services sectors. Engineer Maqbool has more than 20 years of diversified experience in ICT engineering, software development, business startups, and leadership. Thank you, Engineer Maqbool. We also invite on stage Mr. Eddie Aboud, CEO of GBM Oman. He started his career at a service provider and continued his journey in the telco sector, where he ended up with Saudi telco company STC, a program manager for their entire data network design and implementation unit. He then moved to IT business in 2008, where he joined GBM 12 years ago, and his career is a unique blend of various capacities of organizations across Europe, Middle East, Africa, in different roles, including engineering, project programming, management, business development. That is also just to name a few. Please help me in welcoming Eddie to the stage. Our next distinguished panelist is Mr. Sunil Kohli, CEO of Dhafar Insurance Company. He has worked in the insurance industry in various capacities over the last 27 years. His last served as the head of reinsurance and liability underwriting at Reliance General Insurance Company in India. Prior to that, he was a general manager of Jubilee Insurance Company Limited in Kenya. Please help me in welcoming him to the stage. To moderate the session, we're now going to invite the best man for the role. He interacts with the bankers, regulators, and fintech wizards on a daily basis and probably knows the industry inside out, perhaps better than anyone else. With 25 years of experience in banking, technology, real estate, development, and tourism, he was the first full-time employee of the Oman Banks Association in June 2017 and just delivered a very great speech just a few minutes ago. Please help me to welcome back to the stage Ali Hassan Musa, CEO of Oman Banks Association. All right, for your questions, guys, we're not going to be passing around the mic because we don't want that exchange to happen. So I'm going to give you a number, which is 99823050. That's for everybody in this room here. If you want to send any questions to the panel, that is how you can send the questions. Again, the number is 99823050. For all of our viewers on the Zoom link, you guys can post your questions directly onto the message, the chat, and we will make sure that we try and cover as many messages as we can. Ali, over to you.
Assalamu alaikum. Good morning again. Thank you very much for accepting to be on the panel of discussion. It is an honor to be here and moderating this session. My first question is to each one of you, if I may, on the impact of COVID-19. The impact during the last few months have been not only financial, have been challenging in a number of ways. Managing your staff. How did you manage your staff? How did you manage your institutions? How did technology play part in that? The impact also can be economic, and it is. What are the challenges? And tell us more about these difficult times and the technology, as I mentioned, how it helped you. If I may start with you, Mr. Khalid, thank you.
Bismillah ar-Rahman ar-Rahim. Thank you, Ali, and thank you for attendance. Thank you for this opportunity. I think the question is very common now, but we can highlight in specific areas the impact of COVID-19 coming as a global, and the outbreak is far-reaching impact everywhere. I don't think there is anyone who can tell that he's isolated or unavoidable impact on the impact of COVID-19. So it's a global, it's not regional, it's not specific to any area. We consider this is started as a health crisis, then it's converted to be financial, then converted to be social. So it's impacted each single minute of our life. And with that escalation and the extended time of the impact, this has actually impacted even the governmental support to provide support to the economical and the social and the other matters. Coming into the banking sector, actually we are in the middle of this crisis, and just one tick on the conventional versus Islamic. I think on this crisis altogether we are in the middle, and it's totally different from the crisis, the financial crisis 2007 and 8, because it's totally different. So the banking sector globally and in the region and in Oman, we are in the middle of this crisis. And what we actually witnessed quickly, when we are facing crisis, it's a real test to build your BCP plan and the others, and to activate and to test. First of all, we believe this crisis is a test to each one of us, to the banking sector and to each bank, how they are resilient to face such kind of a crisis. In case of Bank Nisba, we are a new generated bank, 7 years old, but this was a real test for us because we are going in growth. So it was a real test to see to what extent you are resilient to manage all the challenges and to continue the growth and build more market share and have a balanced approach to serve all stakeholders. Coming back into this, in the banking sector, we start to reset our strategy and the priorities. And it was very simple. We will save, surface, and assess the impact. So the first thing, you have to have a precautionary actions. You have to apply to the public orders, the Supreme Committee and Central Bank guidelines and actions required in this regard. So save your staff, save your customers, have all the precautionary actions there. Then, very important to continue the service, no disruption. We have to keep 24/7 service during all the time, and this was another challenge. And this opened the door for e-channels to be the way to the bank, and we witnessed clearly a good migration percentage from our clients and our database. It's moving from less than 20% to around 35% in a year time, less than a year. This is not only because of the COVID, but also we worked to enhance our mobile application, our internet application, online banking to help people to come. So we see this actually our target to reach 35% or something. It was in 2 years, is coming in less than a year. So there is something good to touch. But going back, after secure save your staff and your customers, then you continue the service 24 hours, provide your services. We are coming to assess the impact of the COVID. And the problem of the continuation, this is actually unplanned crisis because we built our forecast last year almost in December without any impact. Business was as usual. All the year is business as unusual. So this is the issue. And very important to look into something here. We in the banking sector, we believe personally 21st will be more challenging to us. The bad thing on this year, we entered unplanned because we built our plan, then we faced a totally different environment. Now, the good thing, now the last quarter of the year, we are planning for next year. So we understand the circumstances and we will consider all the challenges. But what is happening in this year in all the economical situation will be reflected in the financial statements of our clients, which we have to take it in the 21st on the credit rating and the others. So the impact will be there. So the best approach is to look in an integrated view for 2020 and the 21st. You have to take it because the impact will not be a year, and I think it will carry forward even after 21st to 22 to actually coming back in spite of the fact that maybe we'll have a quick rebound in the economy and banks should take responsibility to bring this again. Going to the last part, which is the impact and the challenging, actually we have a new experience going and work from home, and this is happening overall. But in the banking sector, it's very important on the impact. Simply, the impact started with the asset quality, which is the credit portfolio. Usually 80% of the bank's balance sheet is a credit. So this is a major issue we faced. And the liquidity on the second and third, the profitability, efficiency, digitalization, these are the area where we are looking around. We have to give the credit actually to the central bank because the guidelines came early, on time, and very comprehensive. And personally, I have a real experience. In Bank Nizwa, we manage the liquidity in a very professional manner and very acceptable level due to the relaxation coming from the central bank. In spite of the fact that on the Islamic banking sector, we don't have these short-term instruments to manage the liquidity, but we were being able to actually manage and continue our position. So the credit risk, asset quality, coming with the financial crisis and coming with the standards, the accounting standards, the IFRS 9 impact, looking forward, all that actually brought more challenge to us. I think in Bank Nizwa, we took as a strategy a balanced approach to save the value and to preserve the value of all stakeholders in this crisis. It's not a matter of gaining market share. It's not a matter of gaining a profit. It's more in a balanced approach to preserve the value of the shareholders, the depositors, the finance portfolio, the financing, the credit part, staff, and all stakeholders. This was the aim because we have to move together and navigate this year and looking for the next year.
Thank you, Khalid. Sanjay?
Thank you very much for this question. Good morning, Your Excellencies and distinguished guests. And first of all, I would like to congratulate Team UMS, for organizing this seminar. This session today is more on the technology, and we have been over Zoom calls, MS Team calls, but to come back to have a session live, I think it's a completely different experience. We have been missing it, and I think hopefully things will be better going forward. Just coming back to the question, I think these are unprecedented times, the challenges which we have, and things have evolved very rapidly. Two major things happened. The market volatility increased very significantly, and the liquidity level started declining. And this is across the globe. The GDP is expected to go down this year. There are hundreds of millions of jobs which have been, adjusted or have been lost. So the implications are quite high on this. And when we look at Oman, like other GCC countries, we had this issue of the health crisis, COVID. But apart from that, we have a double whammy of a prolonged oil prices decline, which has been going on for some time. And like many other organizations, I'll just come back to something specific to our group now. We are an investment holding company. Due to this prolonged decline in oil prices and the decline in the credit ratings, the leadership team decided to start prepare, going forward in case there is a shock. So to some extent, we were already preparing for any such thing to happen in a completely different manner. So that helped us. I'm not saying that we have not been impacted by COVID. We have been impacted by COVID. Our group companies have been impacted by COVID to a big extent. But I will say maybe we were a little bit well prepared when it comes to the managing the liquidity and other thing from that perspective. At the onset of the COVID, what we did is the first important thing for us was to ensure the well-being of all our employees. People started working from home. We had to make a lot of technological changes. For us, as well as our all group companies, they did the quite similar thing. We were staying very close with our portfolio companies, and our portfolio companies were staying very close, with their customers from that perspective. Then we started engaging more on that discussion. Once things got stabilized, we were in the middle of various transactions during the COVID time. And what we decided is to continue and progress on the things which we have started before that. And as a result, I'll just give you a few examples. We completed quite significant and complex transactions during the year. We had a part disposal of our investment in Oman Arab Bank during the year. And during the same time, Oman Arab Bank got merged with Aliz. We could have delayed this whole process because that is a time when everybody was working from home. Many offices were closed, but we decided to work hard and complete this thing. We engaged with the regulators on this matter, and we like to thank His Excellency and his team at CBO. They understood the importance of this transaction for us and for the brighter economy, and they were very supportive. They deeply engaged with us, and we were able to get a very good outcome of that transaction. So that's one thing which we did. Apart from that, we completed 3 acquisitions during this time, which were all planned earlier, so we were able to pull them up together during these unprecedented times. We had one more exit, which we did during the COVID session. So for us, things were challenging and difficult, but we continued delivering on the things which we have planned. We looked into it, we reprioritized our goals, we looked at our strategy. We actually did a complete reorganization of the management team to make sure that we are focusing on our goals and we achieve them in a different manner. So apart from that, one of our group company got merged. It's called a SPAC transaction, and that got listed in the NASDAQ. So a lot of things have happened for us during this time. These things also helped us in improving our liquidity position. And now we are in a stage where we are looking at and evaluating very carefully the investment options which we have. Definitely the times are very different. We have to be much more careful. So we are looking into options which fit within our investment philosophy. So that's the broadly thing which we worked on during the COVID challenging times. We are very much blessed. Our portfolio companies are run by a very capable management team. Our direction to them is we stay close with the customers. and focus on a stronger economic rebound and not to focus on short-term profit making. So I think that's the overall thing. We had a diversified portfolio, so some businesses were up, some businesses were down, but I think broadly we have managed it well. The next year is also challenging, and the technology and the presentation which has been made by His Excellency today morning is very encouraging to see how things are coming up on the fintech side, and the things which you have highlighted, Ali, on the digital technology advancement. I think they are really very, very important in the current environment. So just to give you a few things on that.
Thank you, Sanjay, and congratulations on all these developments to Oman Invest, including the important Oman Arab Bank and Al-Az Bank merger. A specific question to you, if I may. Are you investing in fintech?
It's a very good question, and I think even before coming to this seminar and after looking at whatever has been presented, it's a no-brainer. It's a no-brainer. The fintechs, there are two different business models if you really look into it. One are the type of companies which are currently just working on gaining a customer share and the data. Many of these companies are not profitable, but their valuation depends on the number of customers which they have. The diversified portfolio which we have, we are looking into certain fintech companies, from both the aspects. One, which can work along with our group companies, and we can enhance the technological development on them, make them more operating efficient companies and give a much more better customer experience. And the other side is also on the valuation, because we're an investment holding company. So to answer your question, we are very much looking into that.
Thank you, Sanjay. Engineer Maqbool, tell us a bit about Oman Data Park and how you have managed the times during pandemic.
Thank you. First of all, I would like to thank the organizers, and I'm really, I felt so happy about, once while I was listening to the presentation of His Excellency, he actually almost was pulling the words out of our mouth as a technology industry. And he said it all, actually, and plus your presentation as well, Hassan. Yes, we had difficult times, and the first thing we had to do was actually, again, to re-engineer our way of working, making sure that our staff were actually well kept and away from any all this, unprecedented healthy conditions that we are living. Second of all, we had faced challenges. The major challenge I think we faced was around the supply chain, global supply chain. The pandemic had really almost, teared off a lot of these globalization mechanisms that are in place. There is a big hit on the globalization. In fact, a lot of people are terming that to almost, they call it slogalization rather than globalization. So things are becoming very slowly, and we as a technology integrator and a cloud provider, we need to, again, a lot of these equipment has to be actually shipped from across the world. So that was an impact. But then thanks to the, within our data centers, we managed to keep enough infrastructure to serve the market at that time. So we were seen more of a rescuer rather than, people had to wait for their hardware to arrive, as I may say. And then when it comes to the banking industry, I would like to praise the banking industry in Oman. I think they are leaders today in technology so far, among other nations. We still have a lot of things to do, yes, but we are not lagging. I think the banking industry, being close to the banking industry and the financial industry in Oman, I think they're doing great so far in incorporating as fast as possible technologies, onboarding technologies in their workspace. One of the things we did in March, for instance, we've managed to deploy around 300 plus workstations for two banks. Actually, it was Al-Izz Bank and Al-Ahli Bank, who have decided to work remotely. I mean, in percentage, some of their staff had to work remotely in a secure manner, and that in itself is a challenge. We deployed desktop as a service mechanisms, and in a very short time span, it's 48 hours. And we had to do that to make sure that the banking industry fulfill their health requirements to their employees in one sense, and then be able to work remotely in a very secure manner without having to have any impact on their data security and data sovereignty. So that is one of the challenging part, and I think we've done great with the banking with the banking sector so far. Of course, the challenges are there. We as a technology enabler, I think we did good this year. This year was actually an extraordinary for us, and it's the best year so far, since 2012. And this is not only in here. I think technology sector is doing great across the globe. We can see the New York Stock Exchange, the top 5, 6 leaders in technology are always leading the stock markets today, from New York across to Asia.
Is it, if I may interrupt, is it better for you because there is more cloud adaptation?
Exactly. As I said, you have a globalization issue. You have a supply chain issue. A lot of these industries today, especially the financial industry, doesn't have the time to wait for, if you like, for hardwares to arrive in 3, 4, 5 months. So what they do, they are shifting themselves to infrastructure as a service, which we as cloud providers today are having ready within our data centers. Oman Data Park has 3 data centers today, and across these 3 data centers, we have enough infrastructure to serve the market. So basically, instead of you waiting for 6 months plus, you can actually get your infrastructure as a service in a day, or maybe less than a day. So the supply chain issue is solved by the cloud providers today. When it comes to solutions, again, one of them is solutions like Zoom and others. We have deployed 3 platforms locally within our data centers, which serve the local market when it comes to secure, let's say, online chat within corporates themselves. So the government sector today are using it because they cannot actually get themselves to hook themselves to international partners due to the data sovereignty aspect. So we have around 2-3 platforms today. So these kind of readiness is actually what makes technology sector very much geared off towards providing, rescue boats, if you like, to the industry.
Thank you, Engineer Maqbool. Very interesting. Eddie, if you tell us a little about GBM and how you have managed time through Corona.
First of all, thank you very much for the opportunity, and very excited about the presentation done by His Excellency for all the adoption of new technologies and the interest of people. 2 aspects here needs to be discussed. Maybe the internal part in GBM, how we manage it, was a piece of cake. We were ready digitally to be able to operate remotely or on site. There was a spike demand related to the mobility and security, and banks and other than banks as well were forced to leave the offices. So this opened up the security aspect, the discussion. But in specific for the banking, there was the mobility security, but also there was a major disruption in the banking sector, which was the process. Most of the processes were still manually done, manually operated, and we embarked with a couple of banks to automate. That was a project that we started end of last year, and we were very lucky, and they were very lucky as well. We are launching full automation for their processes this year. And that was a key changer. That's it for me. Thank you.
Thank you, Eddie. Sunil, if you can tell us about the fire insurance. I'm sure that the claims against car insurance during this year have been very little. So I'm not going to talk about financials. Tell us a little bit more on technology and the challenges that your colleagues have spoken. Thank you.
Good morning to your excellencies and the distinguished guests. And thank you for inviting us to share our experiences. I think insurance industry is formed to face the disasters and help the economy to get through any kind of hiccups and disasters or roadblocks which come in front of us, which we have done in the time of Makunu and floods and other catastrophes. But this was a new event. Although we had heard about pandemics 100 years ago, something happened, and I also attended 1 or 2 seminars by Lloyds, where they said that pandemic will be one of the major event in future. That was around 4 years ago. There was a seminar by Lloyds of London. But I didn't take it very seriously at that time. I said, okay, they're talking about it, but what a pandemic will do? It will have a localized impact maybe for some areas, which is a slum area, or certain areas where it will have an impact and it will be contained. But overall economy, the impact may not be that much. So we didn't realize the extent of impact a pandemic can have on us, and not even locally, but on the global scale. So it was something which was not imagined. Even when we were listening about it in December and January, we thought that when the summer will come, within 2 to 3 months, this pandemic will be over, as it happened earlier. But now still today, so many months have passed and we are still grappling with it. So definitely it's something new and we have never faced before it. So considering that, the way our people, the team, all the industry has responded to it, it is exemplary. So we have really risen up to the occasion and we have faced it quite admirably to face this situation. And as a team, as a whole country, we have come up and did an admirable job. As far as insurance industry is concerned, insurance industry, the impact will be dependent upon various companies depending upon their portfolios. A company which is heavily dependent upon new motor sales insurance, they had a major impact. Or a company which had an impact on the travel insurance. They are doing a lot of travel insurance. For them, 3 to 4 months, there was no travel happening, so they had a major impact. But the companies which had a diversified portfolio, with a proper portfolio balance between various lines of business, they were able to manage this situation quite well. And we at Dhofar Insurance are one of those companies which had a diversified portfolio, and we were able to face this challenge quite well. The other areas which we had to focus upon was remote working, how to adopt the technology, whether we can use artificial intelligence or blockchain, and then how can you work upon non-centralized working situation? Can you have your people stationed at different locations so that at time of disruption, some other area can be utilized to work for you if your particular area is quarantined? So that was another issue. And then business continuity planning. So business continuity planning, all the industry, all companies are doing, but this would be one of the first times when it was actually applied. So this will show how important business continuity planning is and what tools and steps we have already planned, and are we nimble enough to implement those steps when the time comes. Because it was never utilized in many decades, but now suddenly it had to be utilized.
Thank you, Sunil. Sorry to interrupt. That brings me, because we're short of time, brings me to the second question. And let's keep it with you. Are you able today, at your institution, to provide your customers with frictionless digital experience journey from A to Z? And if not, what are you doing about it?
Yeah, that's correct. So I would say that we started journey on the digitalization a couple of years ago. Our board and management, they at that time realized that we had legacy IT systems. We had legacy systems which were 20 to 30 years old, and we had to change those systems to the modern systems to take care of the new times which are coming. So at that time, we started to invest in digital technology, cloud-based technology, and we started that journey. And today, when this happened, we were already in a platform which was web-based, and we could utilize that platform with the help of Oman Data Park. Also, we utilized their services on the cloud. We thank them for uninterrupted support which we got from them during that time, because our heavily reliance was on technology during that period. So not only technology, but also call center also was utilized during this period to provide 24/7 service to the customers.
Thank you, Sunil. If I may, with your permission, go all the way to Mr. Khalid Qaid. It is really important for banks to provide frictionless digital journey for customers. If you may.
Ali, actually, what I can answer, I think what apply to bank needs to apply to the banking sector. Digitalization is no option. In our case, we have a strategic digital journey we started. There will be challenges, but we will move with that ahead. I just mentioned the migration on our clients from physical to e-channels. This will continue. With the good news today, we loved what we heard from His Excellency on the presentation. I think this is really very important to understand the CBO FinTech strategy, and this will actually provided us with an ambitious plan. And what we are planning will come very soon for the implementation. Banking sector cannot survive without digitalization. In our case, we are looking onto the infrastructure security network upgrade. We are looking for core banking upgrade, and we are looking for omni-channels and the platform to come. This is a very long plan, but we will work it in a very, inshallah, efficient way to reach. And we believe, actually, the future of the banking is online, on demand. So it's not a matter of physical. It's a 24/7 service provider sector, and we have to be able, what we are seeing from the plan from the central bank is something very encouraging when it comes onto the payment, being the first in the GCC to bring the instant payments, and this is also all that with the cloud compute. I think all that will help us in the banking sector to move very quickly to reach a new milestone in the digitalization.
Thank you. Sanjay, please.
I think definitely digitalization is extremely relevant, to remain competitive, to remain efficient. And even before the pandemic, I think if you look at it from all our group companies' perspective, or even wider banking sector in Oman, there was definitely a move towards digitalization. There were a lot of initiatives being undertaken earlier that. Now, the pandemic definitely has accelerated the whole thing. And the tasks which were not completed, now the companies and organizations have to work, on a double basis effort to get it right. And I think the another thing is when we start discussing about the fintech, then we will talk about the collaboration. It's not necessarily because we need to look at a broader ecosystem. Not everybody is required to have each and every thing, and people should be providing what they are best at. So if you have an ecosystem, then you can work, and effectively the value which will be generated by the ecosystem definitely has to be much higher than the individual value creation by the respective organization. So I think it has to be a mix of various things coming up. Yeah.
Thank you. Very quickly, please, Engineer Maqbool, and after that, Eddie, how can you help your clients to deliver that frictionless digital journey?
Thank you. Yeah, very quick. Can we have some slides, Akashe? Maybe one. There is an interesting topic, interesting study from Gartner that is just last month released, and it shows how much effort we as the financial institutions have to actually make in order to reprioritize forward and change our way, of capital allocation, if you like. So if you can see that, the question was, how do you expect your investment in the following coming years? And a lot of it goes into things like, remote work technologies, most of it. And then there is like the chatbots, there is the infrastructure as a service, the cloud part. So those three are tend to be the most in the top of the priorities for the financial institution, plus the automation and technology. Intrinsically, Internet of Things and others like tokenizations are not really going to be in the top priority for the next couple of years. And this shows us that, the reprioritization has to be there in order to build a proper ecosystem around it and, with a proper framework that has, I think, the legislation institute is deriving. If you go to the second slide, that's the last one. Basically, the priorities will shift start from ensuring employee safety into understanding the changes, the customer changes. As you rightly said in your presentation, we have to be very close. The requirements today are different, and the customer demand are becoming a bit different. Then, on the next 60, 90 days, there is a lot of emphasis on building resilience within the corporate itself and agility in order to serve the market in a faster way, and of course, be close to an ease-of-use customer platform. And then you have the 90 days plus, which is basically redeploying responsibilities of stuff. And this is very interesting. This takes us to what do we need in terms of talents today, as you rightly said in your presentation. I think we need to go back to the College of Banking even and start looking at the curriculums again. Anything can happen there. What kind of talents do we need today in order to serve tomorrow? One of the key talents that we don't have in the financial institute, I see lacking, is actually data scientists. What you need is data scientists, because a lot of these data harvesting that you will be doing in terms of big data analysis, artificial intelligence, in order to understand your customer needs, that requires people to be able to scientifically address and be able to come up with the right use cases. So digitalization in technology itself is not enough. What you need to digitalize the stuff with, they are starting from proper data scientists, and we need those from college state. We need to go back to the College of Banking and other universities that we have in here locally and see how much of those can be mapped.
Very interesting. Thank you. Eddie, last words, please.
I would like to take this question to tackle 3 stages, where the current base is we need to digitize, what we're calling the digitization, which is something that is supposed to be the first step and very basic. And this is moving from paper to paperless, maybe to have the data stored, and maybe at a point in time to start analyzing it and using AI. The second stage is the digital transformation, which is way more than digitization. And in that, we don't talk just about the digital part. We're talking about transforming the business. And then we have also another one, which is the business model, which includes maybe fintech and many more. When we're talking about digital transformation and when we're talking about business models, we need to design the journey of the customer. And you rightly mentioned in your presentation about the new customer. What we're trying to do, we keep in our minds the traditional way, and we're trying to make it digitized or make it through channels, be it mobile, be it whatever it is. And you mentioned the payments, which should be the first step in the fintech. Those are the first elements to move to new wave, which is touching base on the new people, the new customers that we need to have. But if we keep in mind the journey of the customer, customers, you rightly mentioned, they do not want any more branches. Maybe there will be still branches, but the way we're channeling the branch through very different business model, the use of the branches should be very different. This is where the digitalization, in my opinion, kicks in. And we rightly mentioned by Mr. Khalid, for example, the Bank Niswa, for instance. Right now, they are on a journey for that. I wish, and this is a long run, it's not something that can be established in a year or two only. We keep the customer in mind as in designing his journey. We call it customer experience. But currently today we have 3 generations of customer experiences. Are we having 3 different ways of delivering our services? When we keep this in mind, we design our services accordingly, and then business model.
Thank you very much. Ladies and gentlemen, Your Excellencies, would like to thank all the panelists, and my apology that we have taken longer than expected. So thank you very much, all of you. And if you may, please.
Thank you.
Thank you.
Thank you all for such an engaging debate. Now, after some serious discussions, it's time for some celebrations. We'd now like to present Oman Banking and Finance Awards powered by OER. It is an OER initiative to acknowledge the achievements of the best performers in the banking and non-banking financial sectors in the Sultanate. To take you through the awards presentation, I'd like to invite Mr. Mayank Singh, Group Editor and Director, Business Operations, UMS, to do the honors.
Good morning, Your Excellencies and distinguished guests. This year marks the 11th edition of OER's Best Bank and NBFC survey. And over the last 11 years, the banking and finance landscape of the Sultanate has changed completely. But as they say, the more things change, the more they remain the same. In 2009, when we started the survey, the world was going through the subprime mortgage crisis. And here we're in 2020, and we are facing the onslaught of the COVID-19 pandemic. But one lesson that we have learned is that tough times don't last, but tough businesses do. And today is a celebration of such businesses and organizations. A quick word on the methodology. The winners of Oman Banking and Finance Awards have been selected based on a survey of banks and NBFCs done by OER and Ubhar Capital. The results were verified by Abu Timam Grant Thornton. And the survey is based on financial performance of banks and leasing companies on various parameters over the last 4 years from 2016 to 2019. The banks with total assets of over 3 billion Omani riyals at the end of 2019 were considered for the large banks category awards, whereas banks with total assets below 3 billion Omani riyals were placed in the mid-sized banks category. The third category comprises of dedicated Islamic banks. Overall, we are going to present 13 awards, including the special awards across banking, finance, investments, insurance, and technology domains. It is my honor to kindly request our honorable chief guest, His Excellency Tahir Salim Al-Amri, to kindly come on stage to do the honors. Yeah, Your Excellency. I'd also request Mr. Atulya Sharma and Mr. Saeed Al-Mashni, General Manager, Corporate Affairs and Business Development, United Media Services, to join His Excellency on stage to present the Oman Banking and Finance Awards. The first award of the morning is for excellence in investments. While the last 6 years have been quite difficult due to weak oil prices and slower economic growth, the onset of COVID-19 has created a new kind of crisis for businesses. However, we are pleased to see that in the face of all these challenges, the winning company has substantially grown its revenues and diversified its investment portfolio. As a result, the quality of its earnings has improved remarkably, and profits have more than doubled. In recognition of its achievements during such a difficult phase, we present the Excellence in Investment Award to Invest. I would like to invite Mr. Anwar Al-Jabri, Board Member Invest, on stage to receive the award. Congratulations, Mr. Anwar and Oman West. The next award is for excellence in insurance. The winning company has launched a number of innovative insurance products, including mobile accidental damage and term life insurance with COVID protection. The company has an excellent track record in fast claims settlement, especially during testing times, such as in the Mekunu cyclone and the recent floods in Salalah. The winner is Dhofar Insurance Company, and I request Mr. Majid Al-Toki, the chairman of Dhofar Insurance, to please come on stage. Congratulations, Mr. Majid, and to Dhofar Insurance. The next award is for the best non-banking finance company. The winning company has performed admirably on growth, sustainability, asset quality, and efficiency parameters to emerge on top. The winner is Tajir Finance Company, and I'd like to request Mr. Shaheen Mohammad Al-Balushi, CEO, to please join us on stage to receive the award. Congratulations, Mr. Shaheen and to Tajir Finance Company. Our next award is in the technology segment, and it is for industry leadership in virtual data centers. And it goes to a company for offering Nebula, a cloud-based service, which is also known as Virtual Data Center as a Service, or VDCAS. It is the first virtual data center in Oman to be implemented. It is an all-in-one solution offering computing, storage, networking, and network service security services. It is supported and managed by a highly qualified and professionally certified local team of experts and is compliant with local and international requirements, with options for hosting at the company's data center or at the customer premises. It enables up to 55% savings on total cost of ownership versus a traditional data center. And the winner is Oman Data Park. For Nebula Virtual Data Center, I'd like to invite Mr. Maqbool Al-Wahebi, CEO, on stage, please. Congratulations, Oman Data Park and Mr. Maqbool. I think you're really doing a great job in putting Oman on the international map in terms of data centers. Our next award is for Lifetime Achievement in Technology. And we are honored to give this award to an industry stalwart who's the co-founder, director, and group CEO of a global provider of enterprise solutions and digital transformation initiatives with a proven track record encompassing over 3 decades of accomplishments in leadership positions. An executive entrepreneur with a high level of people centricity, the winner's ingenuity and acumen for entering, understanding, and creating new markets have been instrumental in elevating the company's standing in the global IT landscape. Under his leadership, the company stands as a 3,000+ member strong organization, catering to over 1,000 global customers across 20 countries, with a focus on banking and financial services, energy, telecom, government, retail, and tech sectors, to state a few. Ladies and gentlemen, please put your hands together for the recipient of the Lifetime Achievement in Technology Award, Mr. S. Durga Prasad, co-founder, director, and group CEO of Bahwan Cybertech Group. Unfortunately, Mr. Durga Prasad couldn't make it to this event today as he's in India, but one of his colleagues will collect it on his behalf. We also have but he has sent a small or a short video message for us today. Can we please play the video? There's a short video. I mean, if you can possibly just, I think.
Distinguished Chief Guest, His Excellency Tahir Salam Al-Amri, Executive President for Central Bank of Oman, His Excellency Sheikh Salam bin Mushtahil Al-Mashani, host for the evening, the organizers, Oman Economic Review, dignitaries from the Oman Banking Association, ladies and gentlemen. I'm honored to receive the Lifetime Achievement Award in Technology and extend my immense gratitude to late His Majesty Sultan Qaboos bin Said and His Majesty Sultan Haitham bin Tariq, the Government of Oman, Oman Economic Review panel, and our valuable customers for this distinction. My special thanks to our chairperson, Sheikha Hind Bawan, fellow BCTians, and my family for the tremendous support and trust placed in me since inception, which was instrumental for my success. Inspired by our chairperson and a small team of committed individuals, our dream was to build a world-class global institution through intellectual property, taking Oman into Silicon Valley and vice versa, delivering high value to every customer and their stakeholders. Today, we are probably the largest software house from the region, earning respect globally, resulting in exclusive strategic partnerships with industry leaders such as TIPCO, Techion, MemSQL, and Zycus, to name a few. Aiming for delivering a unicorn, our digital business out of Silicon Valley has acquired and built 4 platforms, namely DropThought, a real-time digital experience capture and analytics platform, AI/ML-powered predictive analytics platforms such as Asymmetrics RT360, our fintech offering for financial services and enterprise risk management, with 90% market share in Indian banking sector for early warning system, and Retina 360 and Geodatify for energy sector and utilities industry verticals. The 4th one being Digital Supply Chain 360 initiative, Fuel Trans and IVMS and Shahan Exchange. We serve over 1,000 customers across USA, Middle East, Africa, India, and Far East through our presence in 20 countries and 4 continents, through 9 subsidiaries, joint ventures with DHL and Brunei government, and a global workforce of over 3,000. Over the years, we have received several prestigious awards. The high point was when BCT got featured in 2 case studies at Stanford Graduate School and titled Bhavan Cybertech in 2017 and beyond, and Bhavan Cybertech in 2018, developing DT360. With these case studies being included in the curriculum for management studies in Stanford and listed at Harvard Business School, we felt that we have arrived. Besides these 2, our AI/ML product, Retina 360, being included as a case study for over 2 years at Kellogg's Management School, was the icing on the cake, making BCT the company from the region positioned as a world-class technology institution with global impact. I feel our journey has just begun. Building on the platform laid, we continue our work towards achieving greater excellence and in building a unicorn from Oman. We will not rest until then. Needless to say, we need your continued patronage and encouragement. Thanks once again for the trust, support, and your inspiration, for which I am ever grateful. Thank you.
Congratulations, Mr. Durga Prasad, once again. Moving on, we are now going to present our next set of 7 awards in the banking sector. The first award is a special one for a bank that has achieved 3 decades of excellence in banking. The winning bank started as a small transactional bank, but today has emerged as one of the leading banks in Oman. Over the last 3 decades, the bank has made immense contribution towards the growth and development of the Omani banking sector and the national economy. The bank has successfully combined and balanced people, process, and technology for a sustainable growth in the digital era. The winning bank CEO, Mr. Abdul Hakim Al Ojeli, joined the bank way back in 1990 and has grown with the bank, witnessing the bank's growth from a small 1 branch and 80 employees to the second largest bank in Oman with 70 branches and over 1,600 employees under his leadership. Yes, Bank Dhofar is the recipient for 3 decades of excellence in banking. I would now like to request Mr. Ahmad Saeed Al Ibrahim, General Manager and Chief Corporate Services Officer of Bank Dhofar, to please come on stage to receive the award. Congratulations, Bank Dhofar. I'd request for a huge round of applause for Mr. Abdul Hakim Al Ojeli. 30 years, built up this bank from scratch. Tremendous achievement, sir. Tremendous achievements. Congratulations. The next award is for leadership in agile banking. the winning bank has managed to accelerate its digital transformation journey to deliver superior customer experience by introducing a strong agile culture within the organization that is focused on cross-functional collaboration. The agile philosophy places its customers at the core of its bank business strategy and direction, ensuring that it delivers continuous value by offering innovative solutions, enhanced efficiencies and controls, and empowering employees across the organization to contribute to the bank's strategic objectives. The winner of Leadership in Agile Banking is Oman Arab Bank. And can I have Mr. Rashad Al Musafir, CEO Oman Arab Bank, on stage to please receive the award? Heartiest congratulations to Oman Arab Bank. The next award is for the Islamic Banker of the Year. The winner is an industry leader who heads the first Islamic bank of the country, and under his leadership, the bank has continued its strong performance despite the challenging economic environment. The bank's profit growth has been the highest in the industry, with a 37% growth in profit during the first half of the year. The growth in assets, financing, and deposits of 14% is also the highest during the first 6 months of the year. With him at the helm, the bank has been continuously investing in offering a unique Islamic banking experience to its customers as a part of its customer-centric strategy at its core by providing specific services through electronic channels, which has led to a record increase in its retail and corporate client base. The winner of Islamic Banking of the Year is Mr. Khalid Al Kayat, CEO, Bank Nizwa. Congratulations, Bank Nizwa, which has been recognized as one of the world's best Islamic financial institutions in 2022. Our next award is for the CEO of the Year in Banking, and this is a big one. It goes to a leading banker for developing and setting into gear a 5-year robust strategic blueprint for the bank that was a turning point for the organization that is significantly different and better, with a strong prominence in the market today. He commenced with the rebranding and repositioning of the bank. The bank's purpose is to help people win by delivering banking for an ever-changing world. He initiated, led, and inspired a bank-wide internal transformational change, introducing a culture of performance, innovation, entrepreneurship, and enhancing broad-based institutional capabilities that have made the bank ready for the next wave of its growth and expansion in an increasingly fast-changing world. He set the bank on a strong financial growth trajectory with a clear purpose, promise, principles, and distinctive brand personality, with a vision to become a world-leading Omani services company that helps customers, communities, and people to prosper and grow. His strategic decision-making has contributed significantly to Oman's socio-economic development and helped in creating thousands of jobs for Omanis by supporting mega multi-million-dollar greenfield projects. The winner of CEO of the Year in Banking is none other than Mr. Ahmad Jafar Al Musalmi, Chief Executive Officer, Sohar International. Congratulations, Mr. Musalmi. More power to you and Sohar International. Our next award for the Best Islamic Bank is the award for the Best Islamic Bank, and the winning bank is one which has performed admirably in almost all key parameters, including growth, sustainability, asset quality, productivity, efficiency, and capital position. No prizes for guessing this one. It's Bank Nizwa, and I request Mr. Khalid to please come on stage again to receive the trophy. Congratulations, Bank Nizwa. Our next award is for the best bank in large size category for growth. The winning bank has achieved an impressive growth in gross loans, customer deposits, fee income, operating profit, and net profit as per our survey. The winner is Sohar International. Can I request Mr. Ahmed back on stage to receive the trophy, please? Congratulations, Sohar International. We come to the final two awards and the biggest ones. Our next award is for the best bank in the mid-size banks category. The winning bank has made it a habit to top OER Best Banks ranking due to its consistent performance over the years. This year, again on the strength of its best performance on parameters including sustainability, asset quality, productivity, and efficiency, it has emerged on top. Yes, the winner is, in the best banks in the mid-size category, is Ahli Bank. And I'd request Mr. Saeed Al-Hatmi, CEO Ahli Bank, to please join us on stage. Congratulations, Mr. Saeed Al-Hatmi and Ahli Bank. This brings us to the last award of the day and the biggest award of our survey. It's for the best bank in the large bank segment. The winning bank has set new benchmarks in the market, which is consistent performance over the years, and as a result, it has made it to the top this year for the third year in a row, which is a remarkable achievement. Now, it does bigger necessarily mean better, probably not all the time, but when it seems like when it comes to Bank Muscat, the answer seems that they are not just better, but nothing less than the best to do for them. Yes, Bank Muscat is the winner of the best bank among large bank segment for its impressive performance on parameters including sustainability, asset quality, productivity, efficiency, and capital position, and more. I request Ms. Sheikh Waleed Al-Hashar, CEO Bank Muscat, to kindly come on stage and receive the award. Can we have a huge round of applause, please? Congratulations, Bank Muscat, and to all the winners, and thank you again, once again. This brings us to the end of Oman Banking and Finance Awards, powered by OER. Thank you, Your Excellency. Mr. Atulya Sharma and Mr. Saeed Al-Mashni for doing the honors. Please. On behalf of OER, we thank the team of U Capital for conducting the survey and Abu Timam Grant Thornton for validating the results. Ladies and gentlemen, Bhawan Cybertech will be contacting you to take your feedback after the event using DropThought. DropThought is a customer experience management platform developed by Bhawan Cybertech. The solution creates delightful experiences across your customer journey via any channel instantly. It's time for a break now. Request all of you to kindly return in 20 minutes as we have an interesting session lined up post-break. Thank you very much.
All right, so since we've got a lot of people on the Zoom link, I think it's better that we actually get started. Our first presenter, before we get started, we have a lineup of about 7 presentations in the next session. And our first presenter post this break is Mr. Hassan Abdul Ali, General Manager, Service Delivery and PMO at Oman Data Park. During his 30+ years of experience, he has worked with some of the top leaders in IT, including VMware, VDC, Azure Cloud, IBM Power, and Ridat KVM. He has been involved in key projects such as Cisco Collaboration, IBM Middleware, EFT switch technology implementation, and Citrix virtualization. A veteran in the banking sector in Oman, he was also instrumental in the implementation of various banking applications, e-government systems, B2B, B2G, enterprise services, e-business applications, and BPM. His topic for the presentation is Banking as a Service. Please help me welcoming on stage Mr. Hassan Abdul Ali, the General Manager, Service Delivery and PMO at Oman Data Park.
Ladies and gentlemen, very good morning. It's a pleasure to be here sharing with you our experience and expertise and research within the cloud and, of course, banking as a service. Now, I tried to collect for the last 1 week what's the trend is happening in the landscape of the banking and try to merge it with the cloud, what's called conversion and transformation, which is happening in all sectors, and how that banks can benefit from the cloud services, and what exactly, as of today in Oman, these transformations required to consider banking as a service. It's worth to mention that we are in the situation of economics is being congested. There's a crisis happening in the oil. So how we should reduce the cost, increase the agile, bring more services on the net. I do remember when I have done research in 1997 of my master research in the Strathclyde University, I very clearly mentioned in my research, in 20 years' time, bank which is running in broken motor concept is going to come over the net. So bank on net was my research. At that time, it was unique in the UK, and I got almost 1,000 of calls saying, is this a story from your mind? But no, it's becoming a fact, because today I do see that's been fashioned. Thanks God that's given me the life. I do see the banks has been transforming over the net. Not in full capacity. Some are in full, and of course some are half. It depends on what exactly service they try to introduce over the net. Now, of course, let me say what is the agenda. Agenda is, what is BaaS? What is banking as a service? Let's define this. Now, I'm going to bring it in theory, and then I'm trying to highlight how ODP can assist you to achieve it. And I'm also going to cover the legacy banking platforms and the API stack. That's the key towards banking on net or banking as a services. Some are calling it banking as a service, some are calling it banking as a platform, and some are calling it bank on net. It's almost the same. What challenges we have towards achieving this goal? And by the way, the more you come on bank on service, a new paradigm, it's a new landscape of the banking, it's a new line of business. Samples, of course, I'm going to highlight, which comes from my research of the internet, and tools which you needed to bring it on board, mainly for applications development and DevOps. That tools has been well known as Kubernetes and Red Hat OpenStack and OpenShift. And I have also our services portfolio, which is ODP can help you to achieve this transformation. And finally, I'll highlight the conclusion. Now, what is banking as a service? It's an end-to-end process ensuring the overall execution of all the financial services provided over the web. Such digital banking services available on demand. Remember, I'm focusing from business perspective, business to business. I'm not considering my slides consumer, though it will be crossed by, but mainly as a business. How we can bring a product and services over the net, which a business partner can collaborate and link his workflow and his application dynamically and consume your banking services. Also, we have to consider BaaS does not need to be built on the banking infrastructure. It's an add-on layer. It's an extra layer can be built over the infrastructure. I'll visualize that through the slides as well. BaaS operates in services layer, so-called API stack. So you have to consider strategically, if you want to achieve this kind of strategy, you need an API stack to be published over the net. Let's talk about conventional banking. Now, conventional banking is a high cost. There are multi-layers, all right? Starting from the data center, there are so many equipments and hardwares and technologies which you are maintaining daily, from capitalization perspective and operating expenditure as well. So, considering from the generator, UPS, batteries, AMF, DPs, chillers, AHU, and so many equipments to maintain your data center. And that's an ongoing process. So in the economic crisis, I need to reduce this cost. How I can do that? Still high cost. So this layer is an ongoing. By the way, it's dual location, your primary data center and your DR as well. Then you're coming to higher level. The second layer is showing you your infrastructure. You're buying hardwares, compute nodes, storages, network devices, security devices. And by the way, it's not capitalized. You need to capitalize as well as in operating in licenses. So all these layers is an add-on resources as well is required, ongoing. The layer higher is the platform. Where is your operating system, which is running? You're mainly the services, which is as a unique services from the technological layer, not your application. And lastly is your application. So all these 4 layers is a capital and operating cost on the banking. It's an ongoing. It never goes down. It's all the way increasing. Of course, I'm saying I've been 30 years as CIO in the banking, and I know these figures and prices which is coming across. This is not particularly for the banking, for all the sectors. Oil and gas, because I'm servicing 600 customer on boards. Oil and gas, telecom, banking, government, healthcare, insurance, education centers, and many more. In Oman, and 20% of our business operations is for Europe and US, by the way. So let's see how the bank, look, again I'm saying, I'm not looking from the consumer perspective, I'm looking from the business partners, which is mainly, it's a government, oil and gas, telecom, SME, fintechs, healthcare, education, it's still more. But this is an example. How they seek the services from the banking as of today. The only way to go through is the banking channels and branches, okay? With the customer, of course, what's called representative. Now, let's say banks would like, let's say like an oil and gas would like to issue an LC. What is the process forward? You have to come to the branch and you have to talk to the customer representative of the bank and open everything manual. You have to put a paper. You have to process the document. You have to put the application. Can he do it from his application? Let's say he's running a SAP application. Can he run letter of credit directly from the SAP? Yes. If it's not there in Oman, fine, let's do it. So is there an opportunity? Yes, there is an opportunity to do that. So with that have been said, all these companies would like multiple services from the payroll processing, letter of credit, foreign exchange services, and on-demand, of course, cash flow management, and so many more, which is going to be shown also within the slide. So let's see how we can transform this. This is a little bit semi-tricky slide. Let's see how the banks running as of today. I'm not saying all of them, but at least the high-tech, the modernized bank, they have right now on the right, you see the banking systems, core banking systems, trade finance systems, treasury, omni-channels, okay, regulation management systems, and so many on the right, which is showing the bank itself. Now, the bank's applications need to integrate within each other's. So let's say trade finance would like to talk to the core banking systems. So the way forward is to bring a middleware systems, such as an IBM Broker MQ, or a Microsoft BizTalk, or TIBCO, or any of these middleware technology, and start integrating these services together to do full end-to-end process. Well, that internal is not required to be published over the net, but below that, you can still consume these services in a way that can be tailored and customized to my partner. My partner is no more required to come and ask these services manually. He can consume it. So you need to publish it. In order for me to publish, let's say cash flow management, for example. If my customer is in oil and gas, and he would like to transfer from account to account, the only way he have to have internet banking, corporate banking, and then he have to transfer it. Okay, he have to access through the internet banking channel. Can we give him an access from his SAP, from his account payable, account receivable, cash flow management at his end, from the application, from his perspective, not banking perspective. He wants to manage his account from the application of CRM, SAP, ERP, and likewise, each government, each oil and gas, each telco, they've been asking me for almost 20 years, can we do this? And of course, answer was no. Now, the more technology goes forward, these services being redesigned in order to come as a microservices. They macro segmented these services and published it in a form of API. It's called API, Application Program Interface, and a stack which is built on top of the existing services, microwing that in order to publish it to the partner. Let's look at it from another angle. Of course, this is a slide I took it from the internet. I found this is already, I have done it on 4 or 5 banks. I saw this is already live for them. Now, let's see how they have done it. They have like a banking layer down, running with their core banking, trade finance, whatever banking applications running. They refresh these services in a way, if you see it, small macros, and then they put it as a layer. And they publish it. Let me tell you again another way. For example, if I want to, let's say I want to consume some of my funds from my card. So the way I have to go to do it, I have to go to ATM and cash, or I have to go to point of sale and I transact. But the other ways is an e-commerce transaction which is happening on the net. So what banks have done here, how they encourage or they managed to amplify the process of e-commerce. What they did, they provide an API. As simple as the e-payment gateway from the banking perspective is nothing but accepts a public interfacing for application program interface for payment transactions called purchase transaction, nothing else. By doing this, billion of transactions happening across the world. So you're buying from Amazon. So Amazon, what is doing? He's transacting to the payment gateway, which is banks have published it. So that's only a purchase transaction. Can we do others? Yes, of course we can do. And they start building these layers till they have reached, it's a complete ecosystem. Now, let's see the challenges which is right now happening. I'm looking from right now this slide is looking from Oman's local market. Banks runs on a legacy. It's a rigid process. It's a still batch environment running. I have noticed banks running end-of-day processes, month-end processes, year-end processes, quarterly-end processes. It takes an hours. Monzo Bank is a new bank, born I think 4 or 5 years back, and it's fully running on Amazon. And completely, I'm still digging down to find what core they're using. I failed to find it. They are 24/7. And by the way, what does it mean 24/7? They still can do RTGS transaction. They can still do real-time ACH. It's automated clearinghouse systems transaction running 24/7. How they have done it? What they did, they have collaboratively joined true system developers, an application developer, and they use the power of cloud and Kubernetes, which is container orchestrator. Because we need orchestrator for the cloud, we need orchestrator for message, we need orchestrator also for the containers as well. And they use this technology and they have been very fast. They announced, I was looking at their YouTube, in 6 months they gained 2 million customers. Now, there are a lot of back office processes running right now, slowing down the operations of real-time self-service. So, for example, if I want checkbook, can I get it now? Of course, no. If it's weekend, you have to wait for the next working days, and application will go forward, and then it will go in the back process. At least I need 5 or 6 days, not a week, to get my checkbook. Imagine. So I was happy to see today's announcement of direct debit. This is going to offload, or at least retire the checks processing. But there's developments going on forward on that cycle. There is, of course, will be a transformation within the technology and ultimately the process. Technology is changing, by the way. Now in the back we were seeing mainframe system is broken down to super mini, and then it's been hyper-converged environment, and now it's micro-segmented, it's on demand, it's a cloud. So all of these journey which is happening, you have to rephrase your strategy from the technological perspective and also a business. Digital authentication and authorization is still card. Now if I want to, when you're doing a payment transaction, what is happening? Before they authorize means the debit transaction, they authorize you put your PIN. Why not authorizing me from the mobile? Now mobile is growing versus card. So in Oman, and particularly I'm saying, I love to see it on the ATM I'm coming and I'm authenticating myself from the mobile. And I'm taking cash from mobile. I just put NFC with the ATMs and I get my cash. It's beautiful. Why not? What is stopping us? It is coming. This transformation is happening slowly. But down the road, if you rephrase your strategy, you're going to see mobile is the device going to be a bank. This mobile is a bank. I'm very cautious and I'm passionate about the cryptocurrency. I'm in this for the last 2-3 years. And the way I see the trends of this going, especially the ICO, I'll highlight what is an ICO, initial coin offering. And the way these projects coming to the market, you can't stop it. I know there are, at least in Oman, there are a good number of youth, they are contacting me all the time, they're doing exchange already from the mobile. Thanks. So people's doing it. And by the way, they're using the mobile. I managed to open my account in Monzo just from my mobile. And cards delivered to my house in 3-4 working days. Imagine. But in the pandemic, my card was expired. I took 3 weeks running into the branches, everything is locked down, and I couldn't get my card. The card came from overseas to me to my house. Imagine. Where is the problem? You need to rephrase your processes again. So here, of course, the risk is the movement of the money is very fast in BaaS. It's very fast versus if you look to the traditional banking. So if I want to money transfer, it's just a matter of click, and money is gone from my account, from my wallet, on my mobile, to the second party in a second. There's no back office back office audit which is going to happen. If I'm doing SWIFT transaction, it's going to be in form of application, it's going to go to back office, they will check, they will make sure this transaction is within the credit, or if it's not credit, it's debit, whatever it is, and then they look AML process, and so on and so forth, till money is being transferred. Now this is all the challenges which is coming into BaaS. BaaS is different model, completely different model. And today's strategies, which is shown by His Excellency, is very promising that we have to rephrase against that and see how we can introduce BaaS. And by the way, when I'm saying BaaS is just a theory, I also put a model that we can achieve it as well at the latest within my slides. Banks have lots of data, okay? I'm really feeling sorry about it. Banks have a lot of data. Our CEO was saying today, Mr. Maqbool, you need data science. But I'm looking at it also from an added point, you can sell the data. BaaS is a model letting you to sell the data. Now, if anyone comes inquiry on my data, he have to pay me. I'm not going to get surprised later on if you go and inquire about an ID, and Royal Oman Police is going to, you have to pay 100 paisa for this transaction. Because when you come to me, you want to consume information of, I have a data, I'm publishing it. The more you consume, the more revenue is going. You have to think from that perspective. Now, let's say another model which is in the market showing how bank and fintechs is fighting, honestly. I do see it. Now, if you see that every small, this is like a bricks, it's been broken down, showing that's not my model. That's the model which is in life now. You can go back to Monzo, and you're going to see it as well, and Anna as well. They saying, yeah, like you have an acquiring function, you have core bank function, you have trade business functions, and when you would start to modernize that services in a way, the fintech can consume it. I think it was very valid point today. You can't stop fintech, but you can sell to the fintech. You can collaborate with the fintech. These modules which is around you now, all the application vendors from core banking, trade, let's say ACI is a well-known company in the banking application. They're completely refreshing, redesigning their services in API orientation. For what purpose? To re-enhance in efficiency as well as opening a new opportunity for business. Banks have to look, they are not just a bank. They have to sell their data, and they have to publish their data as a form of a business. So this integration is an ongoing process. This is some sample. Of course, these slides are shareable. And you can take this and try to look how I can refresh my strategy as a banker. 6 banks, of course, they are not all, but this is what I have done research on. Monzo, Ana, Pinta, all of these like 6 banks, they have born not even within the last decade. They have millions and millions. And everyone I've been done on the YouTube research and I found their CEOs, they targeting every 6 months 1 to 2 million customers. They started with the fintech, slowly they've grown, and Monzo became a bank. They say they're announcing we are a bank. They are a full-fledged bank now. And they are already publishing 150 services for their corporate. Now, let's see how that can be transformed. Oh, sorry. Now, how ODP can help you? The layer 1, 2, 3, and 4, which is an added layer, we can overtake this on spot. We got a couple of calls, okay? Can we introduce, and one of them latest is one of the big telecom company in Oman, how we can use your ODP infrastructure. And we took the complete layers from the data center to the infra, to the platform, and finally even to the container level as a layer orchestrator. And we simplified the entire operation for them. These guys just came on board and they just published their application, start using this application for multiple purpose, for SIT, which is system integration testing, user acceptance testing, pre-SIT, CDIC, and finally for production. And the DevOps is part of it. DevOps in new terminology and a new technology and operation, where you can develop your application and publish it on live without a complete orchestrated. No need engineers to be sitting behind that. Once you satisfy your applications, then it's been built correctly and tested correctly, you can publish it online immediately. So, what ODP is doing, all of these cost cutting on the right, you see, I have been set with a couple of the organizations from oil and gas and telecom and did some calculation. Basic is 50% cost cut. 50% in the agility. Now, we have said during the pandemic, banks staff being locked. We published for Al-Izz Bank and Al-Ahli Bank for 400 users in a period of 5 days. In 5 days. So the end user was sitting and he was seeing from his home's PC, complete the desktop of the bank, the application completely, full application, full cycle. And he was doing complete management. And by the way, we even went an extra mile, and I have designed also something called workspace as a service and something called collaboration as a service. So I also got a call from one of the big hospitals in Oman. They say our doctors locked down and we have a lot of patients, how we can reach them? And we designed and made for them, the doctor is sitting at home, opening his PC, and he sees complete national health system application in front of him, and next to him is his complete video conferencing and talking to his patient face to face. And that was really very good example for us that's been built. For what? If you look to the cost, it is honestly uncountable. It's so cheap versus what you're going to build in time, and you're talking about agility. So ODP is taking full role within all these layers, even to the last layer. I'm not saying just from the perspective of transformation. We do study, we do consultation, we do also transformation. I transformed with my team in 2019 till now, in 16 months, 103 plus organizations from government, oil and gas, telecom. We transformed them completely. Some of them, a case was 4,500 end users with 100 plus branches, SAP workload, completely to the cloud. It took us 5 months. And there are many other examples which is coming. Some are coming in from full data centers, some are coming on IaaS, some are coming in disaster recovery. Disaster recovery, for example, it was a huge business for us for the last 1.5 years. Most of our organizations, mainly governmental, non-governmental, came and they said, we have a private data, our own production data center, we don't have DR. How you can simplify this for us? And we processed for them the complete disaster recovery solution into the cloud, not exceeding 2 to 3 weeks. So here, security is of course very big concern. We've been audited by all kind of, layers, honestly speaking. We are PCI DSS compliance. We are Tier 3 certified. We running different kind of workload from the Microsoft. We have Microsoft Azure, by the way, also, if you would like. We have Oracle workload. We have SAP workload. We have Citrix. All of these is being audited 12 times a year by different sectors. Oil, gas have their own regulation, they come and audit. Telecom, they have their own regulation, they come and audit. Central banks auditing on the banks, most of them banks are with us. So this security is a very big concern. So what we're offering mainly 3 layers of security: physical, network, application, and last not least is the cyber source. We have 16 products on board, from SIM, DMARC, what's called vulnerability scanning, and many managed services as well. So we're leaving to you to the last layer. Focus on your application. Focus how you can streamline this application in order to enhance your services. ODP is offering, this is our not full album of the services. So we're having an IaaS services, we have PaaS service, even we have SaaS. Like I have a SAP, if some company is coming and saying, I don't want to procure the licenses, even you're offering me IaaS PaaS, but again I have to go and procure the SAP and customize the SAP. While in the SAP there are 30 modules, account payable, receivable, inventory, stock management, okay, and many other modules, but I need mainly HR, for example. You're most welcome. I'll just create for you a tenant. It's a multi-tenant environment. I'll give you just over the net and khalas, use it. So many customers coming on from that perspective. Office 365. We migrated hundreds plus companies on Office 365. We do full management as well, from perspective of development and consultation, development, project management, and managed services as well. By the way, we are not into the business of software development lifecycle, but we build complete. I'm saying again, I'm a cloud company, but we got a case of 2 government. We built their complete application. We have built we have come up with the software development lifecycle process, and we have built our own team, and which is built complete government end-to-end application. So the government is just sitting for their I think 23 services, and they are just running across 2 data centers, which is primary in Qom and another one in Dohom. So all of these services we are offering, from the IaaS, PaaS, SaaS, and professional services. Sometimes even there was a bank came to us and say, we have a challenges to get installing the VMware. Can you help us on that? And we did. Some are coming and saying, we have a challenges with IPv6 migration. Can you help us on that? Yes, we do. We have migrated like 2 or 3 companies, and one of them was bank, in half an hour over IPv6 public-facing internet-based services. So these services growing with us. And by the way, we are not supporting Oman. We are supporting GCC. We have projects also across the GCC as well. Finally, I'm coming to the end. Conclusion. Now, API marketplace is growing, putting all the major company and players into a homogeneous and integrated environment. You have to find for you a place to fit within this. Therefore, you have to build your new strategy for that. By the way, what I'm saying, by putting the strategy, focus again and focus on corporate. Focus on the business. And when you're opening the business, don't look at it from the geographical perspective that I'm targeting Oman. No. When we're putting a cloud service, not looking for Oman now. We're looking GCC. And we're looking also now in India. We're looking across board now. Because the market is open. It's a cloud. It's an internet. So you have to pull your strategies accordingly. Second, put your B2B model. in contractual model, and onboarding. Onboarding, like some of these websites, I have seen it, I have logged in, I just put user and password and registered, and I said, I have seen a full service of banking in front of me. Operations, this doesn't end. You have to focus on the enhancing this operation of API. API will never stop. API stack, this is the life, this is the time of API. It will grow. And this is the ecosystem which is growing over the time, linking oil and gas, telecom, banks, government, all with the other. All of these islands running independently, this ecosystem is coming and putting the bridges across all of these, what's called islands. Now, you have to expand. When you reach API as a stack, you will start maybe 10, 5, I don't know, initially, but over the time you will grow. You have to grow. This API's stack will grow. This is the future. This is what we see it. And banking as a service, of course, is your last milestone which you have to achieve it. And ODP is here to take you to that level. And as simple as this, we are inviting you to trial and test. As simple as this. We have given our Nibola in our environment, even Kubernetes, Azure, Oracle Stack, Cisco technologies, workspace as a service, collaboration as a service, all of these are on board. You just come and do it as a practice, test it, make sure you are confident, then use it. Thank you very much. And I think I was fast, but it was a little bit a tricky kind of presentation, but at least I tried to visualize it in a way as much as I can, putting all these formulas together. And thank you very much. I appreciate it. And I hope that was informative for you. Thank you very much.
Thank you, Mr. Hassan Abdul Ali, the General Manager, Service Delivery and PMO at Oman Data Park, for that presentation. Being one of the end users at Al-Izz Islamic Bank, we were very happy with the turnaround time of making sure that we could work from home, and we actually saw our productivity increase. So a big thank you to Oman Data Park for making that happen for Al-Izz. Coming up next, we have Omar Al-Kharousi, the Head of Transformation from Oman Arab Bank. He has a proven record in project delivery and transformation strategies. He has strong leadership skills with over 19 years of experience in the field of project management. He has extensive experience in managing people, systems, and change management initiatives at local commercial banking institutions. And he previously served as Head of Project Management Office at Bank MUSCAT. His topic for this presentation is transforming organizations with Agile. Please help me in welcoming Omar Kharousi to the stage.
Thank you, everyone. Thank you, everyone here, distinguished guests, organizers. Thank you for giving me this opportunity to present our session today. My name is Omar Al-Kharousi, and I'm going to present to you our experience in Oman Arab Bank. I'm going to present today our experience in Oman Arab Bank and the Agile journey, and why it was a successful journey comparing to other organizations. So I'll start with a few slides on what is Agile. And the reason for that, because many people, they don't understand what is really Agile. And it's not a time boxing, it's not a delivery component in iteration. I was also having that impression. The difference between Agile and the other methodologies is just only to split the delivery into stages and to give the delivery every 2 weeks or every 1 month. But that's not the case. The difference is on the mindset, how the team works together, and how they can think about giving the value to the customer. It's the mindset and it's aspiration of the whole team to work to deliver a value. And that I'll try to explain it in the next slides, what is the difference between the Agile methodology and the other methodologies as well. So if you see here, when we have a waterfall model, we have the requirements, and from the requirements we have our cost and we have our schedule. So we have these requirements and we build our project plan accordingly. And then we know how much it will be costing and how much it will go through. So that we will have a lot of uncertainty. So we don't know what exactly we are going to achieve. We know where we are heading, but we don't know all the challenges. We are not sure of all the challenges. And while we are doing the implementation, let's say we are going to take a year or 2 years, we will face those challenges going forward. While in the Agile, it's upside down, where we know the cost, we know the schedule, and we keep on delivering on an iteration level, on let's say on a monthly level or on every 2 weeks, and we get a delivery every time. So the biggest difference is that we can change at any time. So let's say we are working on an Agile project, and let's say we decided after 3 months, this is not what we want, and it doesn't look like we have going in the right direction, and then we can change it. But at that time, instead of spending too much money and spending too much time, we know in advance whether we are going with the right direction. It's like failing fast, understanding that we are not in the right direction, and we go to the right method. We can do the changes through the journey, and whenever we want to stop, whatever we have built is not a waste. It can be utilized, it can be go to any other investment if we wanted. So in a normal waterfall model, we go through phases. We have the requirements, we have the design, we have the coding, and then we have the testing. So a big project will take 2 years, 1 year, 3 years, it depends. We have so many people working on so many things, and we have, you will not be able to track so many things in parallel. And even if you are able to do that, that will give you a lot of challenges, and challenges will keep on coming. And when you will get the results, you will get it at the end of the project, or at the end of that phase, which normally takes 6 months or 1 year or more than that. While in Agile, it's not about that. It's about the mindset again. You will get a delivery every 2 weeks or every 1 month, and you will get a small component. That delivery, whether you can use it or not, you will get it, and you can test it, and you can verify it, whether it's working or not, and we are going on the right track or not. So you'll get a fast feedback, where if you're not on the right direction, you will be able to know that fast, and then you can change. And you can do whatever changes you want. You will get more transparency, and that I will explain it in the upcoming slide, why you will get more transparency on this, because the whole team knows what each member is working on. And there is no concept of this team is working on the requirement, and the requirement is going to finish, let's say, after 3 months, and after that we'll be able to know what does it look like. In Agile, you will be able to understand more on what the team is working, how they're going to deliver, and what each individual is working on. So with this, you will have more predictability, and you will be able to track the progress in a much better way. So Agile empowers the transparency, and that's the main thing about Agile, other than the mindset, is to understand what every member is working on. In our organization, we have so many developers, but it's very clear, not only for me, for a head of transformation, it's also for the other people, other stakeholders. They know what this developer is working on. They know what this tester is working on, what this analyzer, let's say, working on, what he's going to deliver in this sprint, and what value he's going to deliver in the whole roadmap. So that's very clear to everyone, and that's being published to everyone through our system. And that's the beauty of it, because it will create some kind of competition between the team, making sure that, yes, I'm doing this, and my team member is also doing that, and I have to do it, and I should not fail him. Those kind of competition and healthy work environment will be created through Agile. There is different methodologies. There is different framework to implement Agile. And those are the frameworks which we can talk about. And the most popular one is Scrum and SAFe. SAFe is more like for a big organization when you go for an enterprise level. Scrum is for smaller teams. And combination of that will work well with so many people. Discipline Agile is also very famous, and it's been implemented by IBM. But we went for SAFe, and I think we did the right choice. So let me explain how Agile works here. We have the team members. We have the Scrum Master, and who track the progress, who motivate the team, who make sure that the team are adhering to the agile principles and making sure that, yes, they are not having any challenges and they're working properly. And we have the agile team, the developers, the testers, the people who are doing the analysis, and the other team members. And we have the product owner. And this Scrum Master and Agile team and product owner are called Scrum. And the Scrum teams are between 6 to 9 people. And that's it. So they have to work on something, and they are that small team. So if you have to deliver something which is quite big and in terms of delivery, then you need to have so many teams working on the same thing. But the Scrum team is as small as 6 to 9 people. And when you have so many teams working together, then you will keep them on a train, like what I'm showing here, and that train called an art. So you'll have different teams working in the same art, and that art delivers the big project or the big program. And all of them, those teams are being managed by the Agile coach, which is an RTE, and product manager, who is giving more visionary on the roadmap of the product and where it look like, and the system architecture. Yeah. So the biggest difficulties which we face, and I think all organizations will face whenever they want to implement a new thing, is the resistance to change. And that's normal. That's there for each and every company. That's there for each and every organization. If someone is working for 10 years and he knows what he's doing for 10 years, it's very difficult to tell him, no, stop, and you need to work this way. And again, as I said, the biggest difference between Agile and the other methodologies is the mindset. So asking a person to change not only on the tools, but even the mindset and accepting, let's say, change and working with the team is a bit different, bit difficult, and that's, as per the statistics, is the most highest reason for failing any organization who's trying to implement Agile. It's mainly this, the culture change. So what we did on Oman, our bank, we have implemented this in 2019. We started this. And what I want to share here, how did we succeed on this, and what is our results from that? So in the coming slide, I'll tell why we have succeeded, while so many people has not really did it the same way. So the first thing, when we started, we brought the right people, and we tried to invest on getting the right people here. It's not about we learn what is the theory and what is the method. We get the right people who has already implemented this, who knows what's the difference between Agile and another system, and try to implement it properly. So that investment, it's not one-time investment. We wanted those team members to be with us along with the journey, and they stayed with us for, let's say, more than a year. And they were with us in transforming the bank, because it's a big transformation of the whole bank. It's not an IT transformation only. So we have Agile coaches. We brought 5 Agile coaches. We brought 8 Scrum Masters. And we have some product owners, but the product owners were mixed between the team who are within the bank and outside the bank, and we have 1 release train engineer who's managing the whole train. So we started with that in 2019 on January. The second thing which we have did and has helped us in this journey is the training. And the training was not only one-time training, it was not only a theory training, it was first of all for everyone. And when I say everyone, I'm talking about the senior management, I'm talking about the stakeholders, the sponsors, Agile team, IT team, and business team, and even our vendors. We have invested in training our vendors to make sure that they are also aligned with us in this journey, because they are also part of this journey and they are also going to deliver with us. So that has been taken as a cautious call from the management to do those kind of trainings. The training was mainly not on the tools and the processes, it was mainly on the mindset and what we should do as an Agile team when we work on as Agile. It's not about how do we do it, it's just only how to accept the changes and how to enhance, how to deliver a good value to the customer. So the training was also not as one-time training. It was not on the beginning of the year only. We made sure that we have a continuous training, and we made sure also that the people get certified. And even if a person gets certified, we ask them to do a training and do a training and continue to do a training. We had a training plan for so many people. The reason for that is when you start something new, people will get excited for a few months, and they might adhere to all of this, but they will just get fed up and they will go back to their normal style. Without continuous training, this will not fly. So you need to have that kind of culture within the team and within the organization in order to transform the whole team. And then we have also we have selected also some few Omani talents, and we have sent them aboard for a specialized training in Agile. And the third thing which we did is the on-the-ground coaching. So other than the training, while we are doing the implementation, we definitely will face challenges. And there will be differences between the team. And because it's a new thing, it's very difficult for someone to adhere to what is the new thing is going to. So they'll just only want to switch back to the old process. So the coaches were there to make sure that, yes, we are doing it properly. If we face challenges, they try to solve it in an agile way, in the agile mindset, saying that, yes, this is there and can be solved. And that has helped us not only in solving our problem, it has also helped us in bringing some people who can take over this. Because challenges will keep on happening. We are going to face different kind of challenges while we are doing the implementation. And we need people to take us through those and eliminate those issues within the teams. And this is the biggest difficulty which we have faced. We asked the whole Agile team, and I'm talking about bosses, to be on the same floor, on the same cabins with the normal, with the developers and testers. And it's a big culture change. So no more cabins, no more bosses. If you want to be part of the Agile, then you need to be part of the team. And you need to leave your office and go back and sit along with the team. So we had a big room, a big hall, and we have different teams. And each team is 6 to 9. And whoever it is within that team, he needs to be along with the team on the same table. So whether the person, the product owner, is 15 years experience, he's manager, he's having all of this repetition, we acknowledge that. But if you want to work with an Agile team, then you need to be sitting with them. Because there is no differentiation there on the Agile mindset. There is no bosses there. The boss is a team. So everyone has the same right to raise questions, to change anything. And that's the power of the Agile. So that was one of the biggest things which we faced. We faced a lot of resistance. And in fact, not everyone has moved to Agile because of this initially. Because they did not want to, the cabin, the bossy structure, to let it go. Yeah? So when we started on January 2019, we started with 3 teams. And there was no art at that time, and we want to see whether it works or not. And then after 3 months, because every 3 months we form another team, and then we work on an Agile process. So after 3 months, we created our first art, where we have increased number of teams to 12. And then after that, we keep on increasing number of teams, and we had 2 arts by now, and we have 16 teams. Total number of people working on Agile is more than 100, and they are almost dedicated, like 80% are dedicated, and the remaining 20%, they have some other works, but then they are almost dedicated on this. And because they have seen the benefit of the Agile, they have seen the benefits of delivering value on Agile, we have increased number of teams, and we have seen requests from different business units to work on an Agile way. By the way, when we started here in January, we did not convert all projects, and that's a cautious call which we have taken. We wanted to see whether Agile methodology will work with us or not. So we had different projects working, and we thought we'll start with new projects on Agile way, while the other projects will continue on the waterfall way. But then after some time, we started converting. Once we see the benefits of Agile, we started converting all of those projects to an Agile way. Of course, after discussing with the vendor and seeing different elements of this. So this is the big room or PI planning event. This event happens every 3 months. And it's 2 days event. And we will have a big hall, and the whole team, the management, the agile team, more than 100 people, they will come and they will sit and they will plan for the next 3 months. What we are going to do in the next 3 months, what we are focused. We will align ourselves, all the team members, they will align themselves to the goal of this event and what we want to do in the next 3 months. Everyone will know what each team is working on. Everyone will know what they're going to deliver. So if I give, let's say, a team a particular job, and I know that they can deliver it, they can estimate how long they will take to deliver that. They will break up that particular component into small pieces. And they will say that I will be able to deliver this in the first iteration, which is after 2 weeks, and the second one in the second iteration, and the other thing. So they will plan their delivery throughout the whole quarter. And within that, because there is so many teams, they will also identify what dependencies they have with the other teams. So if you have a team A who is going to deliver some components, but they have a dependency on another team, and they will not be able to deliver that component, let's say in iteration 4, because of a dependency here. So they will make sure that team B deliver whatever dependency on iteration 2 so that they can deliver this component in iteration 4. So that will be displayed to everyone, and everyone knows their dependency and what they're supposed to deliver. And if they fail, they will fail the other teams. And definitely this happened through the whole 2 days. The senior management also attended on the whole 2 days, and that's what it encouraged people. They see that everyone knows what they're working. If I'm a developer, I see the senior management also seeing what I'm going to deliver and what value I'm going to deliver to this organization. People will get motivated because of that. And one more thing which I wanted to say, the confident vote. At the end, there is a plan which will be given to all teams. And they will say, this is what we can deliver in the coming 3 months. And each and every member need to give a confident vote on that plan. And if we see any team member who is not really confident, we go to him and ask him why he's not confident. So we go and check with other team members, yes, there is a problem here and I think we need to fix that, or maybe we need some more support. So we end up the event where everyone is confident that the plan is doable. And that's 3-month plan only, it's not like 2 years. So it's most probably it's going to work because there is a commitment from everyone. And everyone is there on the team, and there is nothing like a silos here because everyone is there and everyone has presented their plan and the dependency was clear with everyone. So this is the program board. Now if you see that different sticky notes there, and there is dependency being mapped between each and every team and between each and every iteration. So if there is something which needs to be delivered by, let's say, team B on the iteration 4, so that the team C can deliver their work in iteration 6, that will be clearly mentioned. And any delay here will impact the other teams as well. So everyone knows what they have to deliver, and they will know also the dependency on their work on the other teams as well. And there is a daily stand-up meetings which happen after that on a daily basis to make sure, yes, we are adhering to the plan and we are going through the process. Yeah? So this is the big event which will happen every 3 months. And so in a year we do it 4 times. And this is where we plan for each quarter. And we plan what we are going to do in the next quarter. And the whole team is there. The whole team, when I'm talking about the testers, the developers, the analyzers, the business owner, the senior management, everyone is there. IT and business, everyone is there, and we stick to the same plan, and we give that plan to everyone. So we don't leave the room after 2 days unless we have the plan which is already committed. So once we complete this quarter, and let's say once the quarter is over, once we complete this quarter, before we start the next quarter, we have an event called Inspect and Adapt. And that event is what motivates the team members. Why? Because first of all, they're going to demonstrate what they have delivered. And they're going to demonstrate that in front of everyone, in front of the senior management and in front of other teams. They are going to show what they have delivered. And they will get proud normally to what they have delivered. And their effort will get recognized. And we will also understand what issues they faced. And we'll try to share it with everyone, saying that they were not able to deliver 100% of what they have committed because of those reasons, and that will be shared with everyone. So that helps in knowledge sharing, and that helps in recognizing the team itself. Now, on March, unfortunately, the whole situation has changed. And we had to go with the new technology. And the current situation of COVID-19 did not allow us to meet in a big halls. But then we still managed to do the whole thing. We did the whole setup of Agile through MS Teams and Zoom. What we have noticed is that the performance has not been changed. And we still continue working with the same performance even during COVID-19. And that's for a simple reason. The team are very small. You are talking about 6 to 9 people working together, and they have been working together for a few months before. So they know each other, they know how to talk to each other, they know what each other is working. There is no big project and big dependency with so many people. It's a small scope, it's clear, it's fixed, and it's with a small team. So we did not foresee any impact in the performance because of the current situation. And that's one of the advantages which we gain from the Agile implementation. So what did we gain? We gain a better productivity. We gain a sustainable delivery. And we know what we're going to deliver every quarter. And it was very clear. And we will show some calculation how did we gain that. And we go on transparency because everyone knows what everyone is working on. And it's clear for the whole team. And the tools has helped us to do that. And the team collaboration has gone to a higher rate. I'll give you some success stories of what we did. We compared one team with one system before Agile and after Agile. So one system we had to deliver in one full year 3 features. While in the second, when we started Agile, we were able to do that in 3 months instead of 1 full year. That was very clear, and it was very recorded very clearly. We have teams who were able to deliver who were able to give a high performance on a quarterly basis, and they were not impacted. We have seen it with so many teams. And yes, we had some teams who need some improvement, but then overall, the performance was sustainable over the quarters. And as I said that when we started the Agile team, and when we started the Agile concept, we did not start it with all the projects. And after some times, once business units have seen the benefits of Agile, they have came and asked us to convert their project to an Agile. They have asked us, and in fact, they have forced us to do this. Once they have seen the benefits and the fast results which they're gaining from Agile. And I know it's very difficult to believe that, but on this year and last quarter as well of last year, we gained more than 85% of what we have planned. And that's in waterfall model, it's very difficult to be achieved, and I know that because I also have the same experience. Gaining 85% is comparing to the challenges. It doesn't mean that we don't have challenges. It doesn't mean that we don't have issues, but we were able to gain or to deliver 85% of what we have delivered. And that's not for 1 quarter only, for many quarters so far. In fact, last quarter we did 94%. We have achieved 94%. So yes, we have started last year, and we have did a lot. And I think Oman Arab Bank is leading in this implementation of Agile. But I think we have a lot to do, and we just only started the journey. Thank you very much.
Thank you, Umar, for that very insightful presentation. Our next speaker is Firas Al-Lawati, Head of FinTech Committee at the Central Bank of Oman. He's been with the Central Bank of Oman since 2007 and he has accomplished a number of projects and initiatives in different business and information technology areas. In addition, he has participated in a number of local and global conferences and seminars. He'll be making his presentation virtually, and his topic is Collaboration Drives FinTech Development. Can we go live with Firas Al-Lawati, please?
Assalamu alaikum, ladies and gentlemen. Very good afternoon to all. It is indeed a great honor and privilege to be virtually with you today. I would like to first offer my highly appreciation to the organizers of the New Age Banking Summit 2020, and it is really a pleasure to be part of this year's event. So today I'll be shedding lights on the collaborations and how collaborations could drive fintech development. So collaboration, it's a key aspect in all our life. It is an essential skill in most sectors. Collaboration is crucial at all levels within the same organization, across organizations, across countries, nations, countries, and even across us as humans. And there are many studies that have concluded or came out with the result that collaborations, partnerships is one of the major factors behind the success of many organizations. It helped to improve the overall performance, addressing gaps, addressing risks, challenges, and also enhance the level of efficiency, productivity that eventually will contribute toward the benefits of the organization, countries, and different aspects. I really believe on this quote by Helen Keller, alone we can do so little, but when together, when we have more of a collaborations, cooperations, partnerships sometime, we can do so much. So today I'll be speaking about the opportunity behind collaboration and how it could drive the fintech developments in terms of collaborations that could enhance the fintech ecosystem, the regulatory, supervisory authorities, and intergovernmental role. Collaboration also between the existing financial service providers and fintech. And then I'll touch on some of the successful examples of collaborations and then a key closing remarks. So, the evolution of digitalization and the financial technology over the past couple of years, has opened new opportunities and as well as new risks and challenges that need to be, looked at, need to be mitigated, that need to be controlled. The highly impressive development of financial technology in terms of services and the emerging company had led to improve, of course, the productivity, customer engagement, and efficiency in the financial services and the products and services that are offered to the customers. Innovation in the financial and banking services has simulated what the banking sector are offering, but with the flavor of creativity, innovation. Simplified the banking and financial services of operations has also, introduced a number, the automating and digitizing also introduce a number of new risks and new threats that we need to have a sort of intensive precautionary measures to achieve, for example, the safety, the integrity, and the stability of the financial sector. However, the disrupt that happened in the change of the financial technology and the new entrance in the existing on the financial institution has caused a reaction, and the reaction was to how regulators could try to balance between governing this industry, supervising this industry, while at the same time try to support the market innovation and and creativity and how they could collaborate. And as a reaction to this demand, they started to develop the fintech ecosystem, which is becoming somehow mature in some organizations. So fintech is not about the whole ecosystem, not only fintech companies or startups. It is about relationships between fintech firms, traditional financial institutions, and that could be also based on collaborations, partnerships. So collaboration among the all relevant stakeholders is considered one of the key success factor. So successful ecosystem depends on a mutual collaborations and cooperations among the relevant stakeholders. So when we look into the fintech ecosystem, of course, there are many examples of the fintech ecosystems, but if we take the key elements of the ecosystems, we have policymakers, education and academia, fintechs, infrastructure, telecommunications, and so on. So fintech is about the whole ecosystem. It's not about only a fintech startups or a fintech company. It's not only about laws and regulations, but it is becoming so clear as we getting mature with the fintech ecosystem that the answer lies or depends on the collaborations between the stakeholders. So it is not only about, it's not, we have to keep always in mind, it's not about enhancing or changing or updating our policies and regulations by the policymakers in terms of the availability of up-to-date, for example, laws, regulations, policies, frameworks that could regulate the sector, but it is also about other players. For example, the players of the education and academia, how we can ensure that the graduates from the schools, universities, colleges are basically meeting the demand of, or the new demand of the market. More sort of a specialized majors and areas and degrees. Also, when we look into the telecommunication, for example, it's an important pillar of the whole ecosystem. If we don't have a proper collaboration, we will end up with having, for example, policies, regulations. We have graduates who meet the requirements, but for example, we don't have a strong telecommunication service. We don't have, for example, a telecommunication or an infrastructure that provide access to those digital services, to those digital products. We may not have, for example, a proper network coverage or an attractive tariff or attractive packages. So it is, on the other hand, also when we move to the funding and the investment is considered one of the important pillar of the fintech. So a lot of fintech startups are facing a challenge in terms of getting the right investment. So again, access to financial resources, availability of the investment funds, either with venture capital, angel investments. Again, it's a key player of the ecosystem. So collaboration will enhance the fintech ecosystem. And before I move forward, talking about the technology companies, for example, they also are an important pillar in terms of collaboration to provide the latest technology, the new technologies that will resolve many problems or issues that are faced by the sector. So if we have collaboration between all these stakeholders, and if we have a collaboration between all these pillars of the fintech ecosystem, definitely we'll reach in a better results and a better conclusion of enhancing the fintech sector or the financial technology or financial and banking sector. So if we move to the regulatory and supervisory authority and the intergovernmental role, we need to focus more, or they have to focus more in building a dynamic sort of a digital financial ecosystem that will facilitate and foster the financial development. And this could not happen if there is no proper support or collaborations between different stakeholders, including the governmental bodies, because there are certain projects, certain initiatives that will enhance the ecosystem, that will enhance the sector, requires different intergovernmental collaborations and cooperations. And in terms of, for example, centralized initiatives, in terms of adopting some dynamic laws and regulations, and the regulators and the government role could be part of, in terms of updating and enhancing the regulations that is based on the market need, that is based on the change or the fast change that is happening in the market. Could happen through fintech regulatory sandbox, innovation hubs, and many other tools. And also we don't have to also focus. Also, we need to focus on the collaboration that will support, in a sense, where regulator they will wish to achieve, and then fintech firms will respond to that requirement, and also they could propose how this could be achieved. Also, fintech solutions need to make sure by the regulators, supervisory authorities, that these fintechs are meeting the safety and reliability measures and criteria that could be set by the governmental bodies. The government also, or their role, could be in supporting the development of national innovative talents and skills by having some incubations or incubators, acceleration programs, connecting different parties together in order to get the maximum benefits of these national initiative talents. And finally, we need to engage with the private sector proactively rather than reactively, where we could thrive. The regulatory authority, the supervisory authority, they push the sector toward the use and of the latest technologies. If we go and move to talk about the collaboration between the existing financial providers and the fintech, we can see there is also maybe a good potential for collaboration and partnership. 81% of the banking executive surveyed by the Venextra and the Euro Banking Association stated that working with partners could be as a best strategy to achieve digital transformation goal. And also, we're looking into the World FinTech report. They say most successful fintech firms have focused on narrow functions or segment with high friction level, or those underserved by could be traditional financial institutions, but have struggled to profitability scale on their own, because traditional financial institutions have the customer, the huge customer databases. They do have the investment, the capital, but they have somehow could be a legacy systems or not up-to-date system, or not utilizing the latest and emerging technology, which could hold them back from this. So if you look into how collaboration happened between the licensed institutions and the technology company or the financial technology, by looking into some features. For example, licensed institutions, they are highly regulated. They play a very excellent, significant role in terms of the economy. They have a large customer base, existing customer base, market presence. They are available. They have a strong capital, reputation, but they could have a legacy systems or an old technology that would require to be, uplift. However, the mindset of the technology companies or the fintech company could be based on innovation. They are thinking mostly about customized and convenient product services. They are quicker, in terms of adjusting and agility. But they have a challenge, for example, in terms of brand, could be brand recognition, the trust challenge comparing to the licensed institution, accessing the budget, the capital and the investment, and also a lack of knowledge in terms of compliance and regulation, to meet the compliance and regulation. So if we may think of how could have sort of a collaborations, maybe partnering with a financial institution will give the startup the ability to obtain financing for future growth, or a joint cooperation or collaboration will lead to ability of the emerging companies to expand and survive in the long term through the partnership with one of the existing players in the sector. Partnership with the bank facilitates emerging companies to reach a large number of customers, and could also attract the new customers faster. Banks have the advantage, for example, of the sector, the clients. Banks more than the startups. Since when startups connect with one of the named banks, they help them to increase their credibility with the clients, promote the fintech to acquire new customers and reputation. So banks could help, and fintech could help the banks to understand the customer needs, the new customer needs, how to tailor it, and also the banks could help fintech to deal with the regulations, requirements, compliance, and laws, and so on. So all these reasons could be a good reason to think about collaborations between the banks and the between fintechs and the banks, fintechs, and the existing financial institution, which could be a good step for expansion, growth, and sustainability for a long term. So despite the power of digitization and technology, what is happening around the world, fintech new interests have not replaced the banks in financial services. So why we may think about collaborations as banks and fintech complement each other, which will end up with a greater value for both organizations. It also helped to establish some sort of synergy by creating a stronger entity through collaboration. I would like to shed light on some of the examples of partnership that happened between some of the big institutions of the world, like JP Morgan Chase, for example, have signed a partnership deal with Plaid. Plaid is a company that builds the technological infrastructures API, application program interface, that connects consumers, traditional financial institutions, and developers. So they signed a deal together, and as said by the head of digital at Chase, the United States Consumer and Commercial in the JP Morgan Chase, they say this will give our customer more control and visibility into where and how their data is being used. And this is considered one of the key steps in their offering, to create a safe aggregation environment. They are focusing on building the ecosystem to enable the fintech progress for decades to come. And this is giving their customers with more choices, convenience, and safe way to access their financial data. And then finally, it was a couple of months back, Visa have bought Plaid in a deal worth $5.3 billion, which roughly doubled the startup last private valuation. Another good example is between PNC Bank, PNC and OnDeck. OnDeck is a digital lender that is helping now PNC to offer an online loans to a small businesses, So the partnership with PNC is a second deal with a large bank where they have the first partnership with JP Morgan. And the business could apply for a credit up to $100,000 electronically from mobile app using PNC mobile app or PNC website. And OnDeck has more than $1 billion worth of loans on its balance sheets. And by the way, PNC is the 8th largest American bank, which help through partnership with OnDeck will cut costs, speed lending, and help finding new customers. Another and final example about Polakomatel is a third mobile operator in Poland, and they have tied up or partnered with the WBK Bank, the third largest banks in Poland in terms of assets, value, and number of outlets. In 2001, they signed a contract and they launched a partnership deal, and they launched a mobile banking service in conjunction with WB Bank. And within the first 12 months, they were able to acquire 81,000 clients. So looking into, just to close my presentation, looking into all these information and some of the successful examples, collaborations among the fintech ecosystem stakeholders help in attracting and catalyzing the innovation in the sector. We shouldn't always keep in mind that regulator supervisory authority role it's everybody's role. It's an ecosystem. However, the supervisory and regulatory role could come through collaboration, and this collaboration will promote the innovation in the financial service industry through introduction of dynamic laws, policies, frameworks that are basically based on the market need rather than based on theories. Collaboration enhance the sector level cost effectiveness and reduce time for many of the fintechs and startups to enter the market, as this collaboration or partnership could reduce the time that is needed to launch a proposed product or a service in the market. It is win-to-win scenario. Collaboration will enhance the customer experience by adding a technological solution in the services. Plus, it will help the financial institutions to enhance and improve their services, their offered digital services, and would reduce the associated costs. So collaboration will support the creation of shared cost fintech solution that can serve the entire sector and will address an important challenge, which is the investment challenge or barrier in the sector. So again, the competition could be one of the ways where it can happen, and collaboration also could be one of the options that could happen. And that's all of my today's presentation. I hope I give you a good information, and thank you once again for being a good listener. So thank you very much, and wish you a safe day, and Assalamu alaikum.
Thank you very much, Firas, for that interesting presentation. Now, moving on, our next presenter is Ms. Jaya Vaidyanathan, CEO of BCT Digital, a subsidiary of Bahwan Cybertech. Her portfolio of skills includes driving product strategy in the digital transformation space, product innovation, risk management, M&A, technology delivery, and execution. She has worked in the US, the UK, and India extensively and is on many international boards. She combines her deep knowledge of financial markets and disruptive technologies, and she began her career in the US as an investment banker. Prior to joining BCT, she was Executive Vice President of Standard Chartered Bank, heading technology and strategy. Her topic for presentation is reimagining the banking world in the post-COVID era. She'll be joining us virtually from India. Can we please go live with Ms. Jaya?
Good afternoon and welcome to this session of the New Age Banking Summit 2020. We're going to talk a little bit about living through the COVID pandemic and what are some of the measures that we can adopt to try and stay safe during this pandemic. So first things first, what is the impact of COVID-19 on the Oman economy? Wherever possible, I'll try to compare and contrast a little bit around the economies around the world as well. Some of the major concerns that I'm sure most of you have is that the break-even price of crude oil in Oman is much higher than that of its Arabian peers. There's been a prompt of a drop in credit rating of the nation, so there's pressure in terms of financing. Some of the sectors, such as tourism, have suffered an enormous impact due to the pandemic, and there's stalling of infrastructure growth. The good news is that it's not a unique phenomena. It's something that most of the other economies have had a more further impact in terms of its overall economy. And the good news is also that the economy, Oman economy, compared to that of the GCC peers, is much more diversified. And you've had 2 full decades of preparation of post-oil economy with focus on a number of sectors. The other positive news is that the telecom revolution has made high-speed data available here throughout the country, and a lot of those work from home, distance education, etc., has continued to progress well. And so new methods in terms of new sectors and business models have emerged. There's also the realization of importance of local production, and Oman is well placed to capture the Arab agri-market, right? So that is something that's been a lot of impact, and it's going to positively affect the Oman economy. And focus on sectors such as tourism and infrastructure is likely to see a weaker recovery rather than a J-based curve recovery. So that's going to have much more positive impetus in terms of the recovery. Like in any of this COVID crisis, right? One of the most important things that people say is to try and stay safe. So what does staying safe mean in terms of the pandemic? So if you ask a healthcare practitioner, he's going to say, wash your hands frequently, wear a mask, use sanitizers, and you can keep the disease at bay. So what in the banking world is the equivalent is that we say, have robust risk management systems in place. And like any hunter does in winter, he hunkers down and sharpens his instruments. And it's the time for the banking world at large to hunker down and focus on risk management if we must make the fastest recovery in terms of all of the sectors out there. So what is that we will be seeing in our BFSI sector, and what are some of the mitigants, or what are some of the masks and washing hands and all those initiatives can we do to recover from this pandemic as much as early as possible? So let's look at that. So what we can see across the retail and commercial banking sector is that there are going to be four main key areas. One is that NPAs are going to surge as both consumers as well as businesses will be unable to make loan payments, and there will be an increased demand for new credit. So which means credit management is going to be key. We will see revenue compression in the short term and in the medium term. And most of our consumers are going to flock towards digital channels for services and sales. And that becomes very important as well. We are going to have misaligned revenues and costs, which also means we have to focus a lot on operational flexibility and rethink our short-term priorities. So what are some of those mitigants that we can do? And how can we focus on all four areas using extensive technology intervention? Let's take a look at that. I'll probably talk a little bit about a case study on the pandemic and how some of the Western and maybe some of our Indian counterparts, what are some of the things they're adopting today to make a fast recovery post-COVID and to also stem the losses during this pandemic. So some of the things that, again, you will see on the counter side is that there were massive supply chain disruptions. And you would see that, there is a mismatch in terms of receivables, payables, account turnover analysis. So while there is gloom and doom all around, what are some of the ways that you can actually put a pen on it and say, you know what, this is exactly the loss that's happening? One of the things that I do is to sit on a lot of the global international boards. And one of the topics that we often ponder about is, what do we put in our annual report? Is that the question going to be, we have X percentage of losses because of COVID? Or is that something that's more tangible? Is that something that we can say with 86.3% certainty, if we found a vaccine in March, then this is going to be the quantifiable loss. And if it's found to be in June of next year, this is going to be with this percentage probability, this is going to be the loss. And can we model that and bring some certainty into the reporting mechanism? That's something that we are working towards, and we are seeing a lot of increased adoption worldwide on the ability to quantify the loss, the ability to do a scenario analysis on the loss, and to also hold down and say, how do we get prepared to a loss of this magnitude, and how do we kind of put a pulse on what exactly is the bleeding, and how much do we have to pump in to make this work for us? So one of the things most people think about is that it's not really, possible. Could we have done something to forecast this? Answer is absolutely none. So what do? We adopt a strategy of portfolio diversification. We use technology tools. I'm probably going to touch upon, in the interest of time, maybe a couple of interventions that we've used in certain other economies that could well hold good for Oman as well. So one of the first things that we've done is to talk about early warning systems and real-time credit monitoring. So what does it mean? This means that we don't wait post-mortem when our loan payers are not able to, our clients are not able to make those payments, to kind of say that this is a stress, and neither are we in that mode able to predict when the recovery will happen. So what we have adopted very successfully as a really good technology intervention is a system of early warning alerts. So this prevents diversion of funds. This prevents suspicious of fraudulent transaction, and also with those customers which are genuinely suffering from an inability to pay, what could some of the intervening measures be? And this is something that maybe I'll take a couple of minutes to walk you through. That is the fact that let's look at external data differently. Let's kind of look at not just traditional data sources such as your core banking or loan origination, but let's look at some of those intangible parameters in terms of recovery. Do we look at commodity prices when we make a credit decision? Do we look at corporate actions when we look at credit decisions? What are some of the intervening mechanisms that the directors on the companies that we lend to, what are some of the intervening measures they are doing? So it is to look at the credit decisioning more holistically, looking at a lot of external data intervention, and to also bring in a certainty using statistical data to say that this is the percentage accuracy in which a diversion is happening, or is the percentage accuracy in which a recovery is likely to happen. And so what are the technology interventions? The technology intervention, when you have 300 decision points, it's pretty much impossible for a human being to look at that. So what we talk about is more an AI-led algorithm, artificial intelligence-led algorithm that enables you to capture a lot of those intangibles, which we call gut feel, and use that to make a credit decisioning that's more logical, that's more quantifiable, and that is more replicable in terms of whoever is looking at the portfolio, and to bring statistics and to also bring interventions. What are some of the additional covenants you will be needing? What are some of the models that you will deploy more successfully? So this is one example of a technology intervention. I did talk a little bit about, how do you quantify loss? How do you actually say with a great certainty what exactly is going to be the loss depending on your exposure to different industries? What does that mean? Bank A may have more exposure to, say, the airline industry. Bank B may have more exposure to healthcare industry. So is the performance of Bank A going to be much worse than that of Bank B? The answer is it could be. It depends on what are the other diversifiable factors. So Bank A could have lent also to the pharma industry. Bank B could have lent more to some of the hospitality industry. So how do you kind of use different sectoral exposures, recovery patterns, and actually bring in a science to the quantification of loss is something that we've touched upon quite a bit with ECL. Now, let me explain this in terms of the context. We see that banks are already weighed down quite a bit by the NPLs in this epidemic. And a liberal approach to provisioning could result in underestimating the risks. And a more stricter approach could hamper credit growth. So it's almost like you're playing the scale and you're kind of saying that we have to go with growth, but you'll have to do it cautiously as well. So one of the methods that most of the Western and some of the counterparts, like for instance, in India, are adopting very strictly during the pandemic and more in months to come as we recover, is to use the approach of expected credit loss provisioning approach. And I do firmly believe that ECL brings Oman pretty much on par with other industries or other countries that follow the IFRS 9 or IA standards, because that plays this balance very well. And we often say that do not use something that's ad hoc, do not use something that's homegrown as far as possible, because you have wonderful solutions from fintech providers that provide you automation to this process. They come with inbuilt risk modeling engines. They take into account compliance requirements which work from a central bank regulating reporting needs. And they also work on the pillars of governance, control, ECL models, model validation, and effective model risk management. In the interest of time, these were something that I just wanted to leave some thoughts around, but would love to, take your questions through the chat window, and I'm sure the organizers will get back to you with the answers on that. So stay safe, both economically, physically, and take care. And hope next year I do see you in person. Thank you very much.
Thank you, Jaya, for being with us all the way from India. Our next speaker is Mr. Shinu Thomas Philip, Senior Executive Manager, Transformation Group at the National Bank of Oman. He manages the implementation of large-scale technology transformation strategy and initiatives of NBO. And he has over 18 years of experience in managing digital transformation, operational excellence, core banking replacement, and information security implementations. He has previously worked with major financial institutions in the Middle East, including Bank Dhofar and Doha Bank. He'll be speaking on the topic, banking as a platform. Please help me in welcoming Mr. Shinu to the stage.
Thank you. Just as a way of introduction, I am Shinu. I am heading the Project Management Office of National Bank of Oman. I am extremely have pleasure for being part of this event with the eminent speakers and also the banking community in Oman. Today the topic which I would like to engage with you is on how do the banks is seeing as a banking itself as a platform in this today's world. Just to start the conversation on that, I would like to see, to invite everyone attention to, when most of us know that all this is social platforms, the Uber, the Facebook, the Alibaba, the Airbnb, all of them connected to millions of customers and serve them and give them services at instantly, and again, not just instantly, at a very, very economical cost and also much efficiently. And what helped them to achieve this scale of success? One thing, if you really look at it, what they did is they just connected a demand side of one side, and they connected the demand of it, wherein consumers who wanted that services to be consumed. And on the other side, what they did is they simply connected or taken the service of service providers rather than creating themselves and engage them to this common platform which they have built. So if you look at it, most of them without any assets, they don't have any assets, but they are the biggest companies without any assets. So this is what I said, and if you closer look at the platform giants, you can see, even if it's Amazon, Apple, Google, or Microsoft, they are all platform giants. What did they do? They have created a demand side where customers can come to their platform and consume their services and very cleverly through their channels. And on the other side, they have their own products they created and published for the consumers to consume. But they also enable third parties to create products and services within their platform and get it consumed. For example, if you look at Amazon, AWS has its own infrastructure services which they created. When it comes to Amazon portal or Amazon platform, there are billions of SMEs is doing their business within the Amazon portal. So before we go into banking as a platform, let's just have a look at the roles or the user or the actors in these platforms. Like I mentioned, there is producers who comes and create their own products in this platform. You have consumers who comes and consume the services, and then you have the providers. Like in some layer, these providers are optional. I will discuss more about it, and then the owner who owns the platform. So if you look at a simple example, you have Android as an operating system. Google has the Android IP. Many phone manufacturers can manufacture phones, use this Android operating system, and we can call it them as the interface or the platform providers. And there are millions of developers or companies who creates useful services or apps within these platforms and give it, so which are the producers, and then the billions and billions of customers who is consuming these services of various different apps, whether it's banks, whether it's insurance, whether it's a payment, travel booking, or whatever you call it, or games, whatever you call it. All those services are consumed by the consumers. How do we play the same game in banking is the question, and what banks were earlier doing. Banks traditionally were focused more on a pipeline-based business, wherein larger banks, larger asset size, more advantage. Larger banks, larger branches, network of distribution branches, it's an advantage. Larger, their own technology of internet banking, mobile banking, it's an advantage. But all in this model, what they do is they create value with their own things, their own products, their own assets, their own infrastructure is where they create value. So the deficiency of this model is, compared to the other model, is the ability to scale too much on value is difficult, because you have to incrementally have the revenue created, or your revenues are incremental. But now banks have the opportunity to have the same platform model adopted for them, because wherein they can create value by orchestrating banking services and giving this to some producers. So somebody else can produce it. Not necessarily always the banking products can come from banks. Somebody else can produce it. And the consumers can consume it, because the consumer behavior is completely changed now. The millennials, they wanted to be very fast, easy to access. It has to be faster. So the ability for them to consume the services is much more better, rather than they consume from the banks, wherein they would consume from it a fintech or a third-party service provider. And more thing about that is not as a banking product. Who wants a banking product? I don't want a banking product. I don't want a loan. I don't want a personal loan. I don't want a credit card. What I want is, I want to do something. I want to buy a car. So hence, while fulfilling that journey, I want banking as a service, not as it is a loan. I want some needs to be fulfilled. So more often, the better to be, these needs are fulfilled by external players and not just the banks alone. Of course, banks can make it. Nowadays, banks are transforming to make it easier and better for the customer, but still, there are other players in the market who can do it better. We will have a look at it. Before going deep into the different strategy a bank can adopt in terms of the platform, because you can do in various models, you can have this platform done. I just want to clear few words or jargons you often hear and you get, and we think it's all the same. So what is banking as a service platform? There is three things especially I want to cover here. One is a banking as a service platform, open banking platform, and a platform banking. There is a slight distinction between these two, especially, and it's a crucial difference for us to understand. Banking as a service platform, where what here bank does is bank embed themselves as smaller services to an external non-bank entity. So here, the bank is just providing as a service, saying that it's like we always say payment service and all. Let me take a different example. A onboarding, KYC onboarding or identification of customer onboarding process. Because most of the other countries, there is a way of digital onboarding KYC, and that service can, and bank is allowed to do that verification of the customer, and they can outsource only that piece of service to somebody else, and they can embed in their product. So in this model, the customer is not owned by the bank. The customer is owned by that service provider who consumes it, because it's in the third-party service provider. Open banking platform, actually we heard about, like mostly these are PSD2 to mandates in Europe and this thing, where in this model what happens is the bank exposes data, not as a service. They will give simply the information to the third parties. The data will be given, but it's up to the service provider, the third party or the fintech to aggregate this information and use it for their own proprietary products, but they get the data from it. For example, there can be a mobile banking app given by a fintech, which if you log in, you can get all your bank accounts regardless of which bank you are banking, you can see in a consolidated place, wherein they will, through open platform, they can get information from different banks, they aggregate it, they present it with a much more intuitive customer interface for you to consume. So you don't need to log into different mobile apps. You can just log in, you can. And this is a place of, or the use case which it is placed. And the last thing is the platform banking, where bank create the platform. Bank consumes fintech services, integrated it in this platform for its own customers to use it, and also through that process entice more customers to join the bank. But in this model, there is a very clever model wherein the bank owns the customer. The customer is not sitting out of the bank, and most banks tend towards using this technique so that they protect their own existing customers, and also with the new digital technologies induce other customers to join them. Now let's have a look at what options, like I said, like different models the banks can offer. They don't need to always have a platform. They can have different models opted, and let's have these different models what bank can adopt, as well as see some examples globally how these models are adopted. So in banks, like you see, like we have products, we have loans, credit cards, bank saving account, cash accounts. These are products. You have different services available for the customers, and internally there are applications, there are operational procedures, like I mentioned, data, license compliance capabilities. So bank has almost this. Even the regulatory thing is a capability of the bank, because the bank has a license to do it. Bank has the method to know how to verify a customer, how to authenticate a customer as per the KYC and the AML laws. So these are all capability of the bank, and they can use all these capabilities and put it as a service and create an ecosystem wherein they can multiply the value of these things. So we will go through one by one, like different strategy bank can adopt. The first thing what bank can do is embed banking in customer chosen applications. One is you embed yourself in customer chosen applications. Second thing is that, okay, there is a platform available and there is a lot of customers in the platform. Get yourself into it also as part of that, so that your services, you get to be used by many of these consumers in that platform. The third thing is you create a platform by yourself and then bring in players into your platform and make them use that. And the fourth is another model is, like I mentioned, offer banking as a service. So somebody else will consume your different service. We will look at some examples. And third, even some of the banks can even extend their service to as a banking service to another bank itself. And there are models in which banks are offering their service to smaller banks or mid-segment banks. So in the first option, like if you look at DBS Singapore, they have a connector which is given to all their SME segment clients who is using Tally. They just plug it in. You have all your payments and receivables automatically automated with the banking system. So you don't need to go and send a file to the bank to send some payments, or you don't need to enter and log into the internet banking of the bank to do your payments. All it's within your own systems. You are already connected with the banks. So this way, they have different adapters. They have adapters for SAP, they have adapters for different ERP. So by default, these SMEs will always choose to use this bank as a service, and any payments they do will get routed through DBS. Is another example of again in the same section. They have not given a connector to this thing. What they have done is they have exposed all their services as an API in one place, one store, and anybody can come and take this and use it. When you use each of these APIs, you get a share of that transaction goes to DBS actually, and they were actually have more than 150 plus live APIs and 50 plus live partners who is consuming this actually. This is a little older information. Now let's look at the second model, participate in a platform or ecosystem. And I can give an example locally here. See, MP Clear, like today, His Excellency, the CBO President has mentioned that the CBO has launched the MP Clear system, so wherein you can do easily in 2018 itself peer-to-peer transaction through mobile, and which is now enhanced to have accept the QR code-based payment from the merchants. And how this is happened? This all is piggybacking. This is all happening by CBO laying a platform and an infrastructure for all financial institutions plus PSPs to take part and use that ecosystem platform to connect and do this payment. So if I know a mobile number of some of my friend, I can just transfer with that mobile number. If I go to a merchant, I can just scan his QR code and paste this thing. But the platform or the ecosystem is provided by the central bank actually. Similarly, you have different platforms like Google Pay, Samsung Pay. All banks can associate with them, tie up with them, get their cards registered in that. So any payments happens through the cards, the bank get a share of it. So you associate with bigger platform providers who has a large customer base. So you also get a share of that. Third option is a strategy or optional strategies. You create your own platforms. Now banks are coming and creating their own platforms and trying to even not show that they are a bank. Like this is in the region by Emirates NPD. They have launched a portal called Sky Shopper, wherein you can buy any of the products, you can buy any you can shop online, you can book your air ticket, but it's all, this platform itself is provided by Emirates NPD. Many travel agencies can come and register and provide their information. Many shops can come and register and publish their products. And once you click and purchase a product, the payment happens seamlessly. It is so the customer itself is knowing, like I mentioned earlier, here customer is not buying the banking service. He's just buying his products what he wants. He doesn't even know that he is inside a bank. He just buys something and he just pay for it and he just gets out, and he not even redirected to a bank. And the fourth one in that is offering banking as a service. This is a wonderful example. Solaris Bank is completely digital bank, and what they do is that they just publish these services, like you go and buy goods or products from online. These are banking products, not even a banking product. These are banking services published in their website. You can see list of services thing. Today you are a college student. You want to create an app which helps you you would like to get a better customer experience and you think that you can give a better customer experience for the people, and you can create a better app. You are free to go do it. You can consume the services. You can give the same banking services by yourself and embed this in your mobile app and then publish it and then acquire customers. So if you go and look at their website, you can see is digital and banking and cards. It's a service. It's not just a product. If you click there, you're not going to get a product. This is a services you can consume from this thing. Like I mentioned, know your customer. So wherein this is actually the bank serve, if you consume this bank and is already ready-made, like they have done all the work. You only need to take this plug and plug it in your mobile app, so or whatever product you are trying to build. So you automatically get to authenticate your customer. You automatically able to do all the validation or the KYC or AML rules you wanted to do as part of the country regulation. So in this example also, like Solaris Bank actually has tied up with a car deal. This is one of the largest online car marketplace. And what they did is the customer will select the car or the second-hand car they would like to buy. It's in Germany. And once they buy the car, including the authentication of the customer is done with the service from this bank. But yes. No, of course, it's beyond loyalty because the customer is actually, the loan product is actually sitting with it because the customer is taking a loan product. So the loan is with the Solaris Bank because the engine is there. Second thing is that even the KYC, that per transaction, they will be giving some percentage of share for any customer you're using my service. So this service are charged. Yeah, and the last thing again, this is a mistake in the number. This is the fifth point where banks offering services to smaller banks. There are banks which may not want to have some of the operations done. Like for example, in investment banking and custody management, they could have digital services of other custody management of bigger banks. They can offer it as a service. The smaller banks can consume it. Like WeBank, they have a better payment system in China. This is being consumed by different smaller banks and they're using it. Even similarly, Solaris Bank also giving their custody services. Just to summarize, so how does bank look post the platform world? Like I mentioned, if you look at it, in earlier, you have a bank, they have their own products, they have their own channels, and this product will be available in their channels, for example, their own branches, their own internet banking, their own mobile banking. But now slowly that's moving away, and banks create its own financial marketplace. So it's like a marketplace, wherein you have all the financial services. Some and many things can be offered through the own channels. Some will be offered through their third party, can consume it as a banking as a service, or it can be consumed by other financial institution. And moreover, the banks have the ability to embed in their platform the fintech services and then induce their customers much further and then have more market share in terms of the customers. So there are, if you look at the bottom line, the possibility of different product models are very, very high in terms of this. And before summarizing, what are the critical success factors? First and foremost, having the right talent, because this is a key, sourcing the right talent who understand the open APIs, who have the structure and the controls to expose the services. Implementing agile at a scale, because this has to be agile, because while your third party is consuming something from your platform, their demands are very high and it keeps very demanding. So you have to be agile and you have to agile at a scale. Keeping the customer at the center. So at the end, all the services you expose is for the benefit of the customer. So you always build your ecosystem or the platform with that customer in mindset. And lastly, And it's not even the last and not the least, when the banks are now very much aware, the way forward is not just by themselves, but to create a platform or an ecosystem wherein they can actually create more value. And actually it's a value chain, like they call it value chain. So you embed air travel will embed a service in the banking service in that, and the air travel will embed somebody else, a logistic service of an airline into that. So it's like not one person getting the value. Everybody in the chain is getting the value because you're embedding. So whoever is good at what, they do their best thing and then collaboratively creating better products which customer needs. And as a closing remark, I think these platforms and the different strategies in the platform will eventually make banking invisible. So you will not even see banks as selling this product, but behind the scenes, banking will be embedded in the customer life journey. Like customer only wanted to fulfill what he needs in life, and while fulfilling that, banking will be immersed and embedded in that, which we will, or the customer itself will not know. And that is what the customer is choosing for us. Well, thank you very much for listening to my presentation. Thank you.
Thank you, Mr. Shino, for that interesting presentation. Our next speaker is Mr. Hakan Roglo, Global Open Banking Lead and MEA Innovation Lead for Data and Services at MasterCard. He's an expert for open data and service ecosystems, open banking regulations, API standardization, instant and frictionless payment, and he's a recognized thought leader in his area of expertise. He brings more than 11 years of project experience in shaping open banking strategies, building API-based use cases, and business models, and designing digital payment schemes in Europe, MENA, Latin America, and Asia. Hakan joined MasterCard from Accenture. He is a board member of the Berlin Group Next Gen PSD2 Advisory Board, the MENA FinTech Association, member of the FinTech Working Group of the Arab Monetary Fund, the AMF, and the Open Banking Working Group of the Euro Banking Association. He's live in Zurich, and he will be joining us virtually. The topic for his presentation is open banking.
Hello, everyone. Good afternoon to MUSCAT, and thank you very much for having me. My name is Hakan Roglu. I'm the Global Open Banking Lead at MasterCard Data and Services, and looking after our advisory services, where we help banks on open banking strategy and different type of creation of use cases in the open banking space, but also after the value-added services around open banking to make open banking possible and make open banking fly with banks, but also in the ecosystem. So thank you very much for having me. And I would like to talk about open banking. So how is open banking done right? And how does that lead into open finance and open data? I think you all of that heard of open banking and open finance. But let me just describe you what are the experiences in implementation of open banking ecosystems, but also on regulation, what's going on globally, and how can that impact the GCC region and especially Oman, and what are the different frameworks, and how can we learn from that? So the concept of openness as such is not really new. And you can see the picture of an airport. Currently not that possible at the moment, but hopefully soon we are getting back to normal. But openness in the travel industry, as I said, is not new. So you can see that with multiple examples. That is one of the many examples that are available on the market, like Skyscanner, where you can, select your travel, your trip, flight, hotels, whatever you need to make your trip possible, right? And you could, think about how is that all possible, right? You have different airlines integrated in one place. You don't have to go to the website of the airlines. You have it in one place. Then you have also hotels and car rentals, so you can do that in one central place. So how is that possible? And how does that have an impact to open banking, right? Because the topic is open banking. How does that fit together? But also look into the logistics space, right? Like car rental or cabs, taxis. You know Google Maps, right? So once you do plan a trip with Google Maps, you say where you want to go, and you get the kind of the route, the shortest route to get to your destination. But what you also have is on that platform, you have different other possibilities where you can trigger a trip using a third-party provider. In this case, it's Uber or Careem. It could be any other logistics company being integrated into the Google Maps ecosystem. And you're using Google Maps as a distribution channel for the service. So just imagine you have a banking service integrated here, a payment service or a banking service integrated into Google Maps. Just think about. So how is that all possible? I think you all heard of APIs. I think that's nothing new as well. So application programming interfaces have been there forever, right? Since we have computers, we have APIs. But now APIs are kind of a terminology, a term that's being used to describe a new type of business model where you can be part of a customer journey without owning the customer journey. You can orchestrate a whole ecosystem using APIs, using connectivity, integrating third-party platforms into your own ecosystem, create value for your end consumers. So that's a mechanism that we need to really think about when it comes to open banking. Open banking is a trend. It's a clear trend at the moment, especially driven by regulators. But also we have jurisdictions where the market is coming up with infrastructure, with standards, with solutions on open banking. So how can that be organized in an orderly manner? We have Europe as the first large jurisdiction globally that came up with open banking regulation. In the UK, United Kingdom, we have the UK open banking regulation to force banks, so to say, to open up for account information, so access to current account information, transaction history, but also payment initiation, so that a fintech, a third party, can make a payment on behalf of the customer after getting consent from the customer to make a payment from the customer account to a merchant account, for example. So that's something that has been implemented now for a while, and we are learning from Europe at the moment. PSD2, as the Payment Services Directive 2, the regulation for the payments market, one important integral part of the regulation is access to accounts. So open banking is part of the regulation. Other jurisdictions have looked into as well, right? Look into Asia, just to highlight Hong Kong with a collaborative approach, Singapore as well. And there are different models how regulators are looking into it, right? I just said collaborative. What does it mean? It means that the regulator is setting the framework, is moderating the development towards open banking, and the market is coming up with solutions. Whereas Europe, I've highlighted it, prescriptive means that the majority of the components of the regulation are clearly defined by the regulator, including API standards, including some kind of customer journey flows even, but also in terms of security, strong customer authentication is clearly described in a prescriptive way by the regulator. So it has different pros and cons, how you do it. And I think Oman and the wider GCC region can learn from that. What's the right mix for the region to think about? Is it really regulation? Is it a collaborative approach? What's the right way to do it? Then look into Australia. I think Australia is an interesting one, also prescriptive, but Australia is going into the open data path, right? So not only banking is just one industry of many, but they're looking into utilities, into telcos. So other industries need to open up as well. It's more about consumer rights. Consumers have the right to use the data that's owned by themselves, and they can share with others if they want, if others are even providing a better service. So as you can see, there's a competition, right? Not only amongst banks, but also banks between telco companies, between utilities companies. So everyone can play a central role for the lives of the consumers, not anymore banks, probably. Looking into Americas, Canada is looking into some type of regulation. Mexico, Brazil, I think Brazil is going a clear path into open finance. I will come to that to explain you what the next evolutions of open banking are. And then obviously looking into the MEA region, right? Especially in GCC, Bahrain is the only country at the moment in the GCC region that came up with a regulation on open banking. I think very exciting times. UAE and the other countries are also observing the market and probably also coming up with some type of framework or an opinion how to shape an open banking framework in the country and in the region. So I just mentioned it quickly, right? Open banking is, as we understand currently in the ecosystem, is about access to basic bank information like current account balance information, information about address and date of birth of the customers, but also transaction initiation, like any type of initiation of a transaction, like payment initiation. Open finance is much more. Open finance is going into a wider range of asset classes, right? Not only current account, but we're looking into investments, insurance, mortgages, name it. Yeah, so any type, or even pensions, right, are all opened up to have a holistic view of the customer and advise the customer in a properly manner, right? Because the accounts and the current accounts are just showing one small fragment of the wealth of a customer. So the necessity of having access to all the data is key for innovation. But also product switching. Open finance is also about bringing in competition, right? To make it easier for consumers to change loans, to change accounts, to change mortgages, and compare prices to make a proper kind of a competitive environment in the market. And regulators are also looking into this, right? So how can we help consumers to save money, to make the right decisions, and benefit from the financial services industry much better than they have done before? Credit scoring also very important use case. And then open data and open services, right? So I talked about Australia. I think it's a very good example of a development into open data, going beyond the banking, the typical one that we are talking about right now. So now, don't forget other areas. I think one of the learnings that we have seen in PSD2, open banking globally, is ensure frictionless customer experience. So whatever you do, if you start with open banking or directly with open finance, customer experience is key, because otherwise customers are not interested in the experts discussions that we have, like open banking. They just want to have their customer experience and the use case. So think about from user's perspective. So in case you are also thinking about to implement a real-time payments infrastructure or request to pay infrastructure in your countries, don't decouple it from open banking, because open banking and real-time payments flows create a range of use cases that you can imagine, that you really need to think about when thinking about such an ecosystem of open banking. Identity services, consent management, liability rules, right? Dispute management. It's very important, is because trust and security is it's key in an open banking or an open ecosystem at all. Because once you lose the trust of the customers, if there's data breach and other incidences, that would really, you would lose the trust of the customers, and you would jeopardize also your brand as a bank. So it's really important to think about what's the best practice, how can you secure, safe and secure data, But it doesn't mean that you're not opening up, right? It just means you should do it, but do it in a cautious way and learn from what happens elsewhere and implement it properly so that you can start from a very good level and learn from there. It's a journey. I mean, even in Europe and other countries, it's a journey. We are getting there, but I think it's a very exciting journey. And if you want to be part of it, I think it's very interesting to see what others have done and learn from it. Australia, I've mentioned it. I think it's a path to open data. They're looking into utilities, telco, and other industries. UK has just run a consultation on open finance. Exactly what I just explained on other asset classes, more competition to the market, going beyond the typical open banking. I think UK is also leading the way in Europe at the moment. But of course, Europe is also not sleeping, at least with PSD2, it was the first large regulation in that space. The European Union has launched earlier this year an open data strategy paper looking into open finance, but also open mobility, energy, health, all the other industries as well. And there are multiple initiatives going on to open up more data. Just highlighting open finance, just to give you an update, just last week, the European Commission came up with the announcement that the plan is to extend PSD2. So next year, there will be a kind of a revision of PSD2, probably PSD3, to look into how that can be evolved into an open finance ecosystem. So watch that as well while thinking about open banking. Just to quickly give you an example on a customer journey, right? What does open finance really mean? Just to give you an example of this fictive customer, Jim, who is, want to switch the mortgage of an for a real estate that he owns to switch the mortgage, right? So Jim would then, provide access to his mortgage data to a marketplace that can compare different mortgages, but the platform needs additional information about current account, what is your financial status, what are the conditions, terms and conditions of your current mortgage, right? To really be able to compare. The system is then, comparing, using the data, comparing it with other offerings on the marketplace, providing the best offering to the consumer, and Jim can then select from the different providers the best option for himself. And then the whole process also enables a frictionless process in applying for the new mortgage and then terminating the existing mortgage, right? That's the vision. I think we are in a good way to get there. But I think that's, in the ideal world, one important use case in open finance that you can imagine, just to give you an example, and there are plenty of more. Also, don't forget, open finance could also be a core, right? To fuel the open data ecosystem, right? The center that is orchestrating banking and finance flows between the different use cases and different industries, different stakeholders. Someone needs to do that. Why not the banking industry? To connect, let's say, mobility and energy, right? So once you just imagine you have an e-car, right? That needs to be charged with energy. The mobility company is buying a car from a car manufacturer. The banking system is orchestrating payment flows. The consumer doesn't have to get off the car and pay for charging or swiping a card or whatever. It can be done in a frictionless way without the consumer doing anything, using biometrics, using behavioral biometrics to make a payment. And the system behind it would then, clear the bills between the utilities companies, the energy company, and the mobility company. The telco company, for example, would provide the network, right, to orchestrate the data flows. I think for the GCC region is super important because of one of the leaders in 5G globally, and the vast, the growing data flows in that space. Why not combining it with open data, with open finance? How can the banking industry play a role in 5G? To orchestrating the data flows, to orchestrate the payment flows, providing banking services for different stakeholders in the ecosystem. Just think about it. I think that's really worth of putting a little bit more efforts in, not only to see what's best practice, but not only reinventing things. It's really about what's the next step, right? Just copying other regulation or other models could probably not be the right fit. It needs to be investigated. But I think to bring in what you are best in, where you are much more advanced in other regions globally, you can bring that all together and build a new ecosystem that is unique globally. Just think about it. And the last thing that I wanted to give you as an input from our perspective, from my perspective, is, what are the key principles that we have learned in different regions where you need to really focus on, just as a summary. You need to be consumer centric. Spend time in protecting the consumer, data rights, data security. How do you ensure dispute resolution? Technology neutral is quite important, because not to be too prescriptive, to allow the market to build standardized infrastructure like API standards. They are the best to know it. A level playing field is key. So to have allow banks, allow fintechs, allow other industry players to have equal rights to access data and create use cases for the end consumers. Phased implementation is approach where you're giving the banking industry and the wider ecosystem some time to in different steps to evolve and to learn, and then to be ready to create a proper open banking ecosystem, rather than giving one deadline and then forcing and pushing everyone to deliver. And then you can see the results that we see at the moment in Europe, where not everyone has a properly working API. Custom experience, I think, is important, but how can you combine it with other rules, with other regulations, especially data privacy rules, to combine it and standardize it? And then last but not least, world-class security standards. I think that's very important to make sure that data is protected in a safe and securely manner. I think now, from my perspective, with my experience talking to regulators in different markets, running open banking strategy work for banks, I think I just wanted to give you some key learnings on top of the principles that I just explained, because the key learnings are really based on the experience, the hands-on, first-hand experience that I've seen. So everything that you build needs to be built in a way that it's has less frictions for the end consumer, that's easy to use, that the consumer sees a clear benefit. Because open banking and open finance is not a self-purpose. It's about to serve the economy, to serve the citizens. It always takes a bit longer than expected. So as I just mentioned, giving a clear one deadline for everyone, let's say 1 year, 18 months. It depends on the market. I think we need to look into how large the market is, how many banks are in the ecosystem, right? Then you can adjust the different timelines. But just think about banks need time to get up to speed, also to open up, to build capabilities in sharing data. I think that needs to be taken into account, into consideration as well. And the regulator, I think, are the best to define the policy goals, the framework, the guidelines around what you want to achieve. And then in a smart way, select the areas where the industry can deliver in the best way, right? Because the industry understands, the market understands what is the latest trend, what are the latest best technology for the market to evolve, and let them innovate rather than do it in a prescriptive way. And of course, it's not very easy, but I think that's the way to go, to balance between the principles, prescriptive regulation, but also in a principle-based, as I said, with guidelines. And also join up legislations, right? So when you have legislations around open data in the utilities space or in telco or so, just be aware that you cannot disconnect it from open banking and open finance. Once you build legislation on sharing data, do it in a holistic way so that it makes sense and you're saving time and money on infrastructure and implementation as well. And open banking, as I said, is a model that allows the ecosystem to innovate, but it also needs to provide some space to create sustainable business models, right? So just to name a few, banking as a service, bank as a TPP, and bank as a platform are those areas that banks are currently looking at. How can I make money with open banking? How can fintechs make money with open banking? So the regulation should also be shaped in a way that it allows the ecosystem to generate business models, because otherwise it's not attractive. And it needs to be a business model that is attractive for end consumers as well. So I think that's from my side. I think thank you very, very much. If you have any questions, just drop your questions on Zoom or contact the organizer. The organizer will contact me to reach out with your questions. I'm more than happy to answer all your questions. Reach out to me. You can see my QR code, just scan it, and you get to my LinkedIn account. Happy to connect, and hopefully also looking forward to see most of you in person very soon, hopefully after the pandemic. Then everything goes back to normal and we can see each other. Thank you so much, and take care.
Thank you, Hakan, for that very informative presentation. That brings us to the last presentation of the day, and the speaker is Mr. Ashwin Shenoy, Vice President Sales in Paymate. He heads the sales and business development activities for Paymate in the Central and Eastern Europe, Middle East, and African regions. He's responsible for establishing key banking partner and customer relationships and building businesses ground up. He'll be joining us virtually as well. The topic for his presentation is Business Payments Made Easy. Let's go live with Ashwin.
Good morning, everyone. I'm Ashwin Shenoy, Vice President and Head of Senior Sales for Paymate, based out of India. And I have with me Ms. Minella D'Souza, who leads our customer relationship management based out of Dubai. Firstly, I would like to thank the organizers of the New Age Banking Summit for this opportunity to present our solution and platform to this wonderful audience. I would also like to thank all the dignitaries and industry professionals for taking the time and being a part of this event. Before I start talking about the platform and its features, I would like to talk a bit about Paymate and its successful journey. We are a 14-year-old young fintech firm headquartered in India with offices in UAE and KSA. We began our journey in 2006 with an aim to transform the payments landscape in India, and quickly moved on to target the untapped supply chain ecosystem, popularly termed as B2B payments. We are a cloud-based solution catering to businesses of all sizes and create solutions that give our customers three distinct advantages: complete automation, access to interest-free credit, and hence the ability to intelligently manage their working capital. So today, with over 50,000 active suppliers and agents on our platform, we processed transactions to the tune of $5 billion annually and growing. So what's the difference, you may ask, from the hundreds of process automation platforms out there? The biggest difference and our USP is we give our customers the power to make supply of payments on the platform using a Visa commercial card. So all non-card accepting suppliers can start receiving payments directly into their bank accounts using our platform at a nominal transaction fee. Visa is a strategic partner in the CMEA region, and we are categorized as a BPSP, Business Payment Solution Provider, a special program curated by Visa to encourage B2B payments using commercial cards. Now, why are we so excited to be here? It is so evident, isn't it? So the Oman market is at the cusp of a fintech revolution, an avalanche breakout. The demographic mix of population having access to technology and banking is encouraging and exciting. And that, coupled with the large untapped potential in the B2B segment, makes this region a great opportunity. We have seen great initiatives taken by the central bank, setting up multi-million-dollar fintech capsules that will accelerate existing setups and also encourage new age technologies to establish their presence here. Thanks also to the Ministry of Commerce and Industry for easing setup policies that give players like us a world of comfort in entering the Oman market and calling it home. So payment strategy and progress in Oman, though still in the initial stages, we've been able to cover good ground with the help of all our partners in Visa. We have our partnerships on the issuing side with all leading banks. We are going to also establish a sandbox environment that will enable us to take our solutions quicker to the market. And our partnership with Visa will enable us to offer this perfect all-round experience to all our clients. Now we actually get to the solution and how it addresses key B2B challenges, more so in the prevalent scenario. We've all been battered by COVID, and businesses and their suppliers are in a stress state. Cash flows are running dry. Businesses want to extend their days payables as much as possible, while suppliers want their payments as early as possible. Simple, right? But how do you achieve this objective? Using payments and process automation. We not only digitize your payables and receivables processes, but also cut all manual payments using checks and wire transfers. All your payments are now routed using commercial cards lodged on the platform. Also, it cuts down all your laborious administrative activities of clearing each invoice at a time, because now, using this platform, you can do bulk payments for all your approved invoices at one go. We also function as a mini ERP, where you can create POs and invoices on the same platform, and hence have an automated reconciliation of all your flows and transactions on the fly. We also understand that access to credit in times of overstretched finances and using credit as a means to pay non-card accepting suppliers is the need of the hour. As I said in the beginning, all of these objectives can be achieved using a commercial card. You can extend your days payables to the tune of 45 to 55 days and pass on these charges as an early payment discount to your suppliers. Our platform has the flexibility of passing these charges at a transaction level, hence the discretion lies with the one making the payment. The solution is extremely light, cloud-based, and open to customizations. We also easily plug into your existing ERPs or systems, so you don't have to re-engineer anything at your end. So this is a simple flow of how it works. This is a high-level view. So we begin with a one-time onboarding process of the buyer. The buyer is also the cardholder and the customer here. We have a one-on-one agreement with each customer that we onboard. Onboarding means we generate login credentials for the customer. Once that is done, the customer then gives me a list of all suppliers he would want onboarded on the payment platform. From there on, we conduct a KYC and AML check on these suppliers. And once that is successfully done, the supplier is activated and live on the platform to start receiving funds into his bank account. Now, this is a one-time registration process. After this is done, we move on to the payments flow, where the customer then uses his login credentials to log on to my platform and start processing all approved invoices, payments for them. The card is already lodged on the platform. So the customer will initiate a payment on the platform. Payment charges this card, takes over the transaction, and then ultimately settles each payment into individual supplier bank accounts. Payment also sends remittance advice to the supplier and also sends an update to the buyer on the payment made. And the buyer on his statement will look at each and every payment that has been made to the supplier. That's how simple it is, right? While we have a number of use cases that we can address, and all the use cases that are in the market, we have a lot of these variations of those mentioned here, but these are the major ones. So we have rental collections, we have payments for customer invoices sent out. You can make bill payments, supplier payments on the platform, and you can also make salary payments. All of these payments done on one platform using a commercial card. I would like to now quickly move on to some case studies, and we are very proud of these case studies when I'll be explaining this to you. One is a receivables success story that we have. The other one is on the payables side. We'll start off with the receivables success story. So I'm sure all of you would have heard about Indigo Airlines. It's the largest low-cost carrier in India and flies to major routes in Asia now and the GCC as well. This case study is more from a point of view of process automation and easing the administrative burden on Indigo's side as well as the agents. So I would want to explain to you what the scenario was before we came in. Though it was a prepaid format, but there used to be a lot of these follow-ups from the agents to Indigo to ascertain and confirm the payments made. And once the payment is done, when will the inventory be allocated to the agents? So the agents had a big team to follow up with Indigo, and Indigo had a big administrative team to answer and attend to all of these agents. Indigo came to us and said, why don't we have a single solution where I can have a single window view to all of my agents, bring them on the platform, ask them to transact using a single instrument, which is a commercial card, and I can use the success message once the transaction is initiated to automatically allocate inventory to the agents. So what we did was we brought all agents of Indigo on our platform. We integrated ourselves with one of Indigo's middleware, the inventory allocation systems middleware. And once these agents transact or initiate a payment for the inventory on my platform, I send the success message to Indigo's inventory allocation system, and boom, the inventory gets allocated on the fly. So now there's absolutely no follow-ups, no manual interventions. The payment is done, the inventory is allocated on the fly, and the system is very clean and simple now. And hence you see, before we came in, we had about 3 to 4 days of windows to process the payment and the inventory. But now it's a 30 seconds process, probably even less. A great success story. We've been managing payments for Indigo since the past 6 years now, and a very happy customer. Proud to say that. We have a payable success story as well. This is with Kansai Nerolac, one of the largest paint manufacturers in India. Today, we manage about 3,500 plus suppliers on our platform for Kansai Nerolac. Before we came in, again from a process point of view, 3,500 suppliers, different channels of submitting invoices, different instruments as payments going out to these suppliers. Again, a lot of manual intervention, a lot of administrative burden at Kansai Nerolac's end. And hence the brief to us was very simple, to clean up the system and make it very, very simple. Now Kansai Nerolac has only one payment instrument, which is a commercial card. And they use our system to generate POs. Suppliers use the system to generate invoices. There's auto reconciliation on the same system. And all the suppliers on our platform receive money into their bank account straight. So no checks, no wire transfers, no multiple channels of payment. It's a single mode of payment to all these suppliers. So you can see how less cluttered the entire system has become and how simple it has become now. And this has given Kansa and Aerolike the power to actually extend their days payables and get those 45 to 55 days of free credit. Again, a proud customer, and we were really happy to have served Kansa and Aerolike for the past 6+ years. So that's it from us, from Paymate. Our coordinates are here. Please feel free to reach out to us. If you have any questions, we are open to take them now. Thank you and have a great day.
Thank you, Mr. Ashwin, for that presentation. It was a perfect end to the deliberations on the new age banking with sharing of diverse views by experts from Oman, Europe, and India. We hope all of you enjoyed the summit's proceedings. Ladies and gentlemen, Bahwan Cybertech will be contacting you to take your feedback post the event using DropThought, a solution developed by Bahwan Cybertech. DropThought is a customer experience management platform to create delightful experience across your customer journey via any channel instantly. We would like to thank our valued partners and sponsors, Oman Bank Association, Oman Data Park, Paymate, Ubar Capital, OER, Alam al-Iqtisad wal-A'mal, BusinessLiveME.com, Banking CIO Outlook, Times of Oman, Shabiba, for their support. And we look forward to seeing you again in 2021. Stay safe, and we will see you next year.